Good morning. 9:15. It's Tuesday. Final day of January 31st. Final day of January 31st, 2023. Wow. Good morning. We're going to be streaming live all day. Stocks, options, squeezers, movers, futures, GMEers, BBBY wires. See what happens here. Get set up a little bit. Get situated. Got a little Yaz. Nice little Yaz going. Morning, Indy. Sharing this on Twitter. We're gonna get a big T+2 today on GME. Alright, getting this out. Market had a little gap up, or a little rally up here in the futures. Good morning. And Discord. Here we go. Okay, good morning, Jeff. Good morning, good morning, morning. Hope you had a good rest or well hydrated. Ate well last night. Slept good and long. GNS, little gap up. Carvana gap up a bit, 9%. GNS 7%. BBIG up 2%. GME up, extra up 1%. So futures were selling off, and I think we were down almost 0.5% maybe this morning. And then 8:30 we had the jobs or the wage data come out, and that ripped it. So yeah, wage price spiral is looking less like an issue. So I think that was causing the market to get a little bullish here in the morning. Before open, still have a lot of earnings, still have Powell tomorrow. So yeah, I'm still bearish. I'm not sure if I'm gonna hold my futures through the FOMC or not. Just depends on how much I'm up by then. If the market it comes back up before then, I'll probably just hold through. If it's a lot of profit, you know, if we're down here or lower, then I might take profit and not hold through the volatility. But we'll see. With that bounce, GME got a bounce. Pretty good bounce, actually. Home sales in the US have now fallen for 11 consecutive months. GME is moving up a bit with the SPY this morning. Morning, Navin. US opens probe into 1.8 million Ford Explorer vehicles over reports windshield trim panels can detach while driving. Thanks. GM. AMC Entertainment to transition from a management and investment role with Saudi Cinema to a licensing relationship. I wonder if that's bullish for AMC. I put BBBY in my notes. I like the chart, and it is not BBY, sorry. What was it? Beyond. Put Beyond in my notes. It has always been a squeezy one. I don't know if our squeeze plays and risk on rally is continuing. Might be the end of it, but if it is, I think Beyond has a move up in its repertoire. Looked like yesterday or 2 days ago it moved up pretty big, rejected, but that was a breakout of this long consolidation and pretty good volume, so might get some options on beyond. And then of course, maybe going long on GME with some options. Still have all my shares. Yeah. Volume is pitiful. Yeah, there's no volume in the pre-market usually. Like CGen. I'm not a fan. The like, poor devils. The Fed, yeah, net app company. All right, U.S. Q4 employment cost index is plus 1%. Consensus was plus 1.1. So basically in line with expectations. Futures briefly turned positive after Q4 employment costs. Euro rises to session high of 1.08635 against the dollar, now positive on the day. U.S. Treasury two-year yield falls 5.6 basis points to 4.2% after ECI data. My futures on natural gas, I did get stopped out on it. Should have had a short. So I took a little loss on that. At some point, I think this thing will find a bottom. And then it should have a pretty good rally, I would imagine, but yet to find that bottom. U.S. house price index month over month November. Actual was negative 0.1 versus 0.00% previous. Estimates was negative 0.4. So the price index, they were expecting negative 0.4. They got 0.1%. So I think that means the price of houses are not coming down as much as they were expecting. S&P Case Shiller, November 20, City Home Price Index down 0.8% month over month. So 0.1 to 0.4. Or no, I guess that's month over month. So 0.8%. JP Morgan CEO Diamond says oil and gas will be necessary for the next 50 years. All right. 631 top said today is 741. What? Maybe. He maybe got chairman 741 days ago. I'm not keeping track. I'm not keeping track. Carvana. Once this risk on and squeezy stuff is over, some of these are going to come crashing back down probably. Carvana might have some more legs though before that happens. Whole market must just be waiting on Wednesday to probably see what is happening. GNS with little gap up 6%. Get logged into stuff here. We got about 5 minutes. And will our eVTOL rally had a pretty big dump yesterday. That's an ugly chart now, which I should probably be abandoning. Alright, so I've got those cover calls from yesterday, I believe, yeah. I'll probably be closing those probably in the morning, even though that's not a good time to be buying. But I do kind of want to get out of them before anything starts to go crazy today. I want to be out of them. And okay. Wait, where are those? Oh, they're in here. So these cover calls from yesterday, these are what, 25 strike. They're up 46% at close yesterday. Today's somewhat of another crux for me, like which way I think it's going. But if we keep getting these, then we're just going to end up being consolidating, which is fine. But the last one was, I think, this day, and it didn't look good, so close, and then I think I reopened somewhere in there too. But the trend is still up. There's not really any divergences signifying a down, a reversal. The volume is... It has been increasing somewhat. On the weekly, maybe we can tell a little better. Yeah, we had a couple big volume days like this one and then this one. So we could just be in a consolidation before another leg up. Or back down, really. Could go either way. So momentum is to the upside. It does seem pretty vulnerable to market moves still. So as far as obligations being met today, being T+2 from last week and that rally on Friday, hopefully today would see something from that. But if not, we're probably just market dependent at this point. What is the buy today? Maybe not buy anything, maybe just sell. Go a chart from Carvana one. Okay, I made fixed 2 errors, not in the description of the pictures. Busted antenna, jacked up mirror. Yeah, they're probably gonna go bankrupt. But I think that's what they were saying. They were like sending out tons of cars they didn't send titles with, and they're supposed to get titles mailed out, and apparently they never had them even. I don't know. So people were driving without titles that they bought from Carvana for like a year. Norway's largest sovereign wealth fund loses a record 164 billion in 2022. Yikes. Is Upstart going? So Upstart could see some of the T+2 probably. Yeah, there you go, 8.4%. What did it do on Friday? So Friday was a pretty big green day for Upstart. Not huge, but yeah. Wait, no, that's not Friday. What's going on here? What? Oh, I'm so confused. Okay, this was Friday. Yeah, so it did have a pretty big Friday. And good volume. This chart actually looks nice. Upstarts, increasing volume. Got the bullish MACD, green over the 9. Looks similar to a lot of charts. Some have made big moves after that. Some have just kind of kept grinding up. It's just if you're timing getting out before the music stops on this squeeze rally. Market's open. Ding ding ding. Starts up 9%. GameStop. And I'm going to close these covered calls. Okay, pretty big move up there on GME as well as mostly just GME actually. Get that paused. I have an order to close my covered call. I'm not gonna change. I'm gonna leave it there at the limit. Going to potentially get into calls today, but would like to see. Ooh, okay. Can't be too jumpy. 2% on GME. BBBY, pretty good move as well. That's a lot of volume on BBY, isn't it? GNS up 6.5%. GME 2.3%. These covered calls are just going the opposite direction. Might be getting T+2 action. I will wait. So these calls are now getting close to break even. Just this morning volatility, as I'm saying, this is when you sell options, not buy them. Little pop in either direction, and it's oh. Carvana's up 8%. Soon you will get paid. SPY's kind of coming back down here a little bit. 30,000 for 2017 Tundra. 30,000 miles right before the price went up. Just lucky. You purchased 2 wheels from Carvana. I think it's a cool concept. I just don't know if they're executing it well. Your bank canceled your loan, but it was a first for them. Oh, doing Carvana. That's a pretty big candle on GME. Holy crap. Brutalized. Well, there you go. Now you know to keep paper trade and don't use real money yet. Yeah, it's a pretty impressive 5-minute candle there. Volume is only been a couple minutes, but nothing crazy yet. Need some pullback for me to close this covered call. Hopefully it'll still be positive. SPY is starting to rip now too. GME is now 3%. Holy crap. AI is up 13%. Yeah, this thing had a nice move. Pretty late on it now. Send, this one has been theorized that it runs before GME. So I don't even have to look at the chart. I didn't see a whole lot of correlation. I think it did maybe a couple times, but 3% on GME. 2.8. Still kind of moving with SPY, but not bad regardless. So first 5 minutes is actually low volume. Yeah, lower than yesterday so far. Much lower. More than that day though. That's interesting. That day we had that big run. But that volume came in later. So selling covered calls on GME today seems sketch, but selling cars to Carvana isn't good. Yeah, the car vending, yeah. All right, there's a pretty big red candle on SPY, pulling GME. But if GME out, we could get our big T+2 move without SPY ripping, as you see. If we outpace the upside, so I mean, it can just rip on the ups and then consolidate when SPY's coming down. GM is up 6%. So probably won't do cover calls today because if today doesn't really pan out, I might close some shares, at least the margin shares. Chart still looks pretty nice though. I mean, thank you guys for your likes. I appreciate it. Got 9 of them in here. AI is holding up pretty well. Nirvana's up 4.5. GNS up 4.8. Shikaka? GME 2.5. Not bad. You can see from 46% closed yesterday, now it's only 20%. So if today is kind of subdued and not a crazy up, we're either this area or where did I see the other day that I thought, oh, or we're in here somewhere. I mean, this would be nice. Or we're not repeating anything and GME stock is broken. That's 150% also. So pre-market basically bounced on that fib level down there. 31.8 or whatever it is. Just see what, oh no, that's not what I want to do. Yeah. Spy's coming down now. See how GME reacts. So if we're going to do the same move, if we're in that area, 150%, 38, 39 area, call it 40, 38.65. And that would be a rally into earnings, setting up for an earnings dump. But it's possible we don't rally until after earnings, which would be quite a while. That's a whole nother month at least. Well done, taking profits. Well done. Hard lesson to learn. MSGM. Not sure, 200%. Motorsports games? I don't know. I saw an IPO coming out called NFT Gaming though. Maybe they had earnings? No, motorsport game shores up balance sheet with debt for equity exchange. Shares, that's not good. Shares drop 11% on that. Not sure. Not sure what's going on with that. Reverse split happened. Spy's coming back up. So GME 2.7. If the run is in the afternoon on GME, that would be helpful for me at least. I can close my covered calls. I could get into other calls. Tank us into earnings. That's been the trend the last like 2 earnings. Before they used to tank us after earnings, and then RC moved the earnings back a couple weeks to line up with the cycle so that they tank us into earnings, but after earnings we rally. So yeah, back here is when that was what they would do, but then you move the earnings up a couple weeks basically. Yeah, so this was a tank into earnings. But that was just right after a pinch, right? This was a tank into earnings. Well, no, actually, this was it tanked, but then it rallied out of earnings. So some of both. And this was a tank after earnings. It's tanked into and after earnings. This one dropped after earnings. So ever since this one, since it's been moved back, it's rallied after earnings. So typically dropped into earnings. This time it didn't really correlate. It rallied into earnings and then kind of kept melting up. This one dropped into earnings and then bounced after earnings, but that was our consolidation. And this one didn't do anything. So this was after the split though. It was post-split. Maybe everything's broken now. Because this one, it just was nothing. SPY's moving back up here. Almost new high. Do I want to go up or down? It doesn't matter what I want. And I'm indifferent. I mean, I just want to trade it the way it goes, I guess. You want to be right. Doesn't matter which way it is. FLGC. Check it out. Probably should have closed my futures down there, but it's okay. Floor Growth Corp. As far as some TA, it looks good. I don't know what's going on with it. If there's news or what caused this, all this volume, this gap up on an inverse head and shoulders there, but kind of got wrecked by today's candle so far. But yeah, momentum's there. Bullish MACD, green over the 9. Looks pretty sketchy. Like a sketchy stock. Outdoor cultivator manufacturer. Oh, in the weed space. Tiny float. Makes sense. Trading is kind of betting on both. I mean, you can, yeah, with options, you can make trades that'll favor going either way, or make trades favoring it goes nowhere and just goes flat. AI continuing to rally. This chart, man. GNS 10% almost. Okay, let me see what my covered calls are like. Still hanging out on those. SPY's moving back up here. BBBY. 0.5% down. They might be a good cover call day. Buy low, silver profit. Yeah, so you want everything to go up, which is fine. Sounds good. GME, I'm kind of hedged and somewhat not actually that hedged right now. But yeah, I'm kind of indifferent because I do have covered calls, which is a short play on it, and I have shares, which is typically long, but I could open covered calls, which would be good for downside. I'm more to the long side on GME though. Much more right now, especially. It's coming down here. SPY just kind of hanging out at its spot. GME 1.5% below VWAP now though. AI is just awesome looking. I got this thing when I IPO'd. I think this is moving on Chat GPT actually. That's what this has been rallying from. You can 100x your losses for sure once you learn options. Yeah, and quickly too. Much quicker, satisfaction than slowly losing money on shares. What a waste. I heard AMD was making moves. SPY ripping up here, new highs. AMD up 1%. But AMD's kind of at this, getting close to this top here. Looking like it's waning a bit. Almost 20% on AI there. There's 20%. SPY high on the day. About to make a new break pre-market high. GME is not feeling that yet. GNS 11%. SEN 9%. LAC 8.5%. Looks nice about volume this morning. Oh, SDCs. 8.5% on that one. Bit of risk on going on. Mullen. SPY's ripping up here still. About to break the pre-market high. Come on here, SPY. Why don't I get my thing? There. I mean, this top is a divergence from that top. SPY kind of rejecting that. It did break out that pre-market high, but now it's a red candle. IDEX. Earnings breaks through that top. Yeah, good. It's I mean it's consolidating up here. Maybe it will. Probably need the support of the market then too, but maybe not. You put it into Procter and Gamble. Probably smart. So I think the divvy stocks are pretty high right now. It's probably still some growth stocks that are better priced. Yeah, IDX looks like a nice chart. GME's got very low volume, so maybe we'll get an afternoon volume run with T+2. $20 a year, baby. US Chicago PMI was 44.3 versus 45.1. The estimates was 45.1. US existing home sales dropped 17.8% in 2022, the most since 2008. Okay, GME just consolidating up here. Coming back down, the cover calls I have are coming back down in price. So, still probably get out of them this morning though. Yeah, I saw Mullen up 6%, GNS 14. Oh, GNS kept going. Yeah, all right. Broke that pre-market high. Squeezy. Mm-hmm. Yeah, I was seeing Mullen too. It's up a bit. Tear almost 8%, 7.5. I'm watching GME some because I've got positions I'm getting in and out of it. So, but yeah, I'm keeping an eye on the other ones. I'm mentioning them. Roku's up 5.5%. Smile Direct 6.7. Yeah, GNS 14. Elba's getting some sympathy on that. This looks like a bull flag. I should probably get out of these. I'll keep my order there. It's fine. BBBY down 2.6 now. AI 18.5%. SPY moving back up again. GNS is at 14%. LAC 10%. Still going. I feel like Powell's didn't put the smack down on. I don't know. I mean, I guess the market's contracted some, but it's still high. I mean, it's only been 2 days basically. US January consumer confidence due at 10. That's the next Next data for today. We had all this morning so far. Home price, wages, Chicago PMI. Then we're going to get consumer confidence, Dallas Fed services revenue, 10:30, Texas services outlook. Not sure those will move it at all. Consumer confidence could a little bit. That's it for today, actually. Thank you guys for your likes. We got 12 of them. I appreciate it. Buy's coming down a little bit now. BBBY is down 4.8%. AI up 18. Genius 12. One, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Wait. Actually 14 now. Thanks for relevance. Appreciate it. Hope you're having a good Tuesday. Taco T plus Tuesday. We had our tacos yesterday. We had Taco Monday. You're excited. Morning, David. All right, GME's still consolidating up here, but SPY's making a red candle. Nat gas is moving up. There's a pretty big red candle in SPY. It's cold. It's still cold there. Still 43 degrees. Okay, my price on my covered call. I've had a limit order at 32. Getting close. Getting close. A little more time decay. A little less volatility, and that thing's gonna get filled. I might want to lower it. Buy's coming down. I'm lowering it. Buy is coming back down to the lows. Pretty big candle. -4 Minnesota. Yeah. I've been in Minnesota in the winter. I did not understand how that place was habitable in the wintertime. Whoa, big dump on GME. That was crazy looking. And just right back up. That candle was violent. -4 degrees here. I'll take 40. You guys still disc golf when it's -4? City skywalk system in Minneapolis, St. Paul. Zombie apocalypse heaven. Humans apparently can survive. Well, the point is it's like -4, wind chill -30. It's a pretty big drop there on GME. Just moving along with SPY. Gonna keep lowering my cover call buy. I haven't opened up any other cover calls, so I'll just squeeze these out a little bit more. I think we could be consolidating before move up, so I haven't closed shares yet either. Probably see what happens on Wednesday, assuming, or today. Still could get it today. 34. It's getting colder. Negative 70. Yeah, people do survive. All right, SPY is just still hanging out, bouncing back and forth in this range. Bounced off the low. And back up. Consumer confidence came out 2 minutes ago. It was 107.1 versus the previous, which was 108.3. The estimates were 109. So consumer confidence has come down. It's come down from last month, and it's lower than estimates. Estimates were projecting more consumer confidence. GME getting a push down. So now my covered calls are up on the day. So from yesterday's close to today, now they're up 3%. AI is holding up well at 18%. I haven't released the SBBBY, but this thing's up 17%. GNS holding up pretty well. LAC, Spotify's up 9%. I think they had earnings, maybe. I'm not sure why they're up so much. Yeah, I think they did have earnings actually. Sen is holding up nicely, 8%. General Motors. Oh, I'm gonna click a tear. BBBY 6% down. So I missed this nice exit, but getting back to basically where I exited. And TA wise, it's bearish. I mean, we've got bearish MACD, red under the 9 moving average. As far as support, see if it's, yeah, today's kind of breaking below. I want to see it hold that kind of 280. Like yesterday, now today is kind of going below it. See if it bounces out of there. So FOMC meeting began at 10 today. U.S. one-year consumer inflation rate expectations 6.8% in January versus revised 6.6% in December. SPY bouncing back up. There's your winter storm warning in Texas. That's weird. In GME for that eventual rally tomorrow next week. Eventually. But does it come down 40% before then? Because that's what it would be if it was retesting this level. Top of the morning access. Snowing in Dallas. Wow. Dude, what the heck? Why isn't nat gas ripping? Oh, hasn't even gone up at all for that news. Bit of a bounce here. We'll go back to extended, see what's going on. Bit of a bounce. No, daddy, no. ATCX, 120%. All these little weird penny stock ones that you're gonna miss. Okay. SPY ripping. Don't know what that's on. Houston, we had some flurries. That's crazy. Hey guys, holding up at the top. GNS, kind of. Sen looks good. Honda's down. Down but due. SDC 5.5%. All right, GME's volume's very, very low this morning, and basically just been following the SPY, so might be in for some afternoon or even noontime push like we got this day. I'm gonna keep an eye on the options. If they start to get into the 80%, which they're not going to today. Interesting, they're IV through here, right? Strange. So the next week's might get into the double digits today, as the volatility goes away. Whoa, big reversal on SPY. Look at that huge wick. Holy crap. Dollar's starting to move up. USO is dropping, natural gas or oil's dropping on that a little bit. Yeah, now we're new low on the day for SPY. A little bit of volatility downside there. Oh, and with some buyers. These covered calls. Yeah, so I had them at 35. Now it's all the way down to 25 cents. I put my order at 15. I'll just go in here and manually close it. Yeah. I don't want to open up more cover calls though. Not yet. ECAT up 7%. What's Lucid doing? Ah, Lucid held up pretty well actually after that big day. Unusual Whales tweeted a video of a guy that turned 44 grand into $1 million that day on Lucid. Crazy. Yeah, we were looking at the options. Looked at the options that day when it rallied, I don't know, 80-90%. You could have turned $170 into 2.8 million if you timed and did everything perfect. And there probably were even better opportunities that That was just the one options I saw. Thank you guys for your likes. Got 17. Well done. Your PS is up 3%. I think they had earnings. Bot has had quite the move. SPY is ripping right back up. Tesla's kind of just consolidating up here. Maybe I should do some cover calls and green candle here. Close them out later in the day. $19 of them on here. Big candle on SPY. That's a big candle on SPY. See if GME gets some push up on this before I do any more covered calls. Those are just big morning candles. BBBY is just getting dropped through this. CMC doing 1.3%. With their merging or whatever, I wonder if playing Ape would be a good move. Because don't they have to match up in price? Doesn't Ape have to come up to $5 and or AMC come down? All right, SPY's not going further. Go ahead and put this order in. I can do it on here. I think I can. SPY is moving up more. All right, so some of my covered calls filled. A little sketchy on the T+2. But I think we're probably going to get a move. If we do, it'll be in the afternoon. What's looking like? Oh, SPY's moving up more. I maybe initiated the beginning of a big rally. You guys can thank me. I mean, we close at 25 into week. That'd be pretty good, above 25. That's what I just sold cover calls on, is 25. So could always roll them. Probably just buy calls to hedge. Cover calls means I'm selling calls. Shorting calls. Only dude. What? I made a new high there. I think the market's gonna still keep waiting for Wednesday, so not probably not a crazy move in any direction at this point, but could bounce up since we have had a couple days, well, just really one day of red. You with you on those 25s? Yeah, they're still pretty good premium. I mean, just for a weekly, 26 cents, like that's pretty legit. So the IV, it's not super high, but it's kind of in the middle. Hasn't come down. If this was in like the double digits this far out of the money, then I'd be a little more skeptical. But 120% or so. Or no, that's the wrong. Wait, what? These are the ones. There we go. Yeah, 150%. So that's pretty high IV. So new high on the SPY. GME's trying to claw with it. BBBY is maybe finding a bottom here. Cover calls can go up or down. For the cover call to expire worthless, which is what you want, more or less, you want it below that price. So we sold 25 covered calls. So by Friday, we want GME below $25. And then we win. All right, SPY's moving up here. We might be a little stuck on these. Let me see. I'm gonna put an order to close my other covered calls on TD, just so I have some that are open. Some shares that are open if we do start to go crazy. Because I don't want all of them to have covered calls. But it's option contracts are fluid, and I don't know how to describe it, liquid. So the pricing of them is always changing. So it's not like we have to hold it till Friday. And as GME price goes up, depending on the velocity that it goes up, those calls will gain in value, which isn't what we want if you're selling calls. But if it goes up even slowly, they might not, because you have time. You're selling time, so as time goes on, those calls lose value. So basically, the price has to go up faster than the value degrades with time. Hyper, HYPR, granted US patent related to AI. Got a halt in here. It's up 80%. Huh. Yeah, AI stuff is going crazy. I think that's why AI is actually running this stock. 21% new high on it on AI. This thing's on quite the tear. But it's not a tear. SPY's coming down, rejecting that new high. And let's see if those got filled. Yeah, I'm dropping my price back down, my covered calls. We get a bearish MACD crossover there yesterday. So right under the 9, so. And there is this divergence on the shorter time frame. So all that stuff is bearish. We'll have a divergence on the 4-hour. But the price is kind of signifying it's just consolidating this range. But that range would mean we could still come back down and test this 19 at least. But yeah, T+2 today, like, I mean, it's kind of a make it or break it. Alright, SPY's been back up. I'm gonna put my order back up. Oh, it started to come up some. Okay. I've got my order to close my 25 calls, cover calls on my TD account. That'll give me 1,000 shares that don't have calls on them at least. And then these other ones, I'll probably just actually hold. I don't know. I don't know if I'd want to take a loss and buy to close them if we start rallying. I probably would. Yeah, if I catch it pretty early, I'll take a loss on those. Yeah, hit that like button. Thanks, TJ. Appreciate it, man. You filled mine at 48 this morning. Nice. Yeah, if you got on this wick or this candle, yeah, my calls swung big on that thing. I didn't open those other ones until here. Yeah, I know AI is ripping. Yeah, new high again. I liked this one. I liked the liked what they were doing. I liked them at IPO. I mean, it's just maybe a little too early now with all the attention on Chat GPT. Definitely waking up. I'd wait though. I mean, long term, I think this will be a good play, but or could be, but I think it's early with the whole market right now. Still to go long on something like that, more speculative. SPY's holding up pretty well up here. So it looks like SPY will probably keep moving up actually. That would be my assumption. Since it did break that high and it's holding some support here, 402 area. But that is kind of at a resistance here. We'll see. It moves up, probably next level, 402.95. What was yesterday's open down here? Or today's repeating yesterday and we get just this until 10:10. Oh, already past that. Maybe this is the top. EU closes in 1 hour. That didn't have any bearing yesterday on our price, but sometimes that causes a direction change. The SPY's coming down. GNS consolidating at a pretty high level. GME doesn't look like it's moving yet to the downside. That green candle right into VWAP. Volume is just off though this morning. 500,000 in the first hour. It's like this day back here. Less than these days though. Wow. So yeah, we might have a afternoon rally on but this This day we had volume, but then it increased almost each hour until it started ripping in like one. So we would need the volume to kind of start increasing. Buy's coming down more. I still have my order on these. Close these covered calls. I don't need all of them. Covered calls. Buy's moving back down here. Maybe a false break to the upside. Hasn't pulled GME yet at all. But GME does look like it's just been paused. So maybe when it resumes, it'll come down. Okay, so GME breaking VWAP there. That is interesting and somewhat inversing. I mean, SPY's moving up a bit. Okay, I'm gonna up my order on here. Okay, closed out of the cover calls on TD. Gonna be looking at these other ones I just opened. Keep an eye on them. So took my profits on the cover calls that were green. Buy is holding up. GME is looking like it wants to get squeezy. Especially because it started this move before SPY even did. Now any bit of upward pressure that SPY is showing, GME is moving. Could keep those covered calls and then just this is more volume too. Yeah, I'm getting out of them. I don't like it. SPY squeezing. Yeah, GME is probably gonna go. Oh shoot, no. Ah, frick. Oh no, I think I went too quick. All right, need to look at calls. I'm looking for next Friday. I don't know if I'm going to be able to open up any positions on here though, because I just closed those. Buy squeezing. GME squeeze with it? It must. Still early. I don't like to call this early, but this is probably the only time. Maybe. Yeah, that's a big move up on SPY too. All right, getting into calls for next week. I think I'm out of all the covered calls. And hopefully I'm not in trouble. Okay, there's a red candle. Got into some calls for next Friday. Hopefully I'm not too hasty and jumpy, but it is Tuesday. AI 24%. SPY is moving up more. AI is getting a push on this too. Look at that. Broke that high. So I saw this increasing volume. Big green with support from the market. I'll just sit with these long calls for now. IV isn't in the 80s, but if this is one of those longer sustained rallies, it's not going to just be straight from the 80% IV up to 100 and 200 whatever. If it's something more like this, this after this happened, IV is probably in the hundreds, and then 150, 120, and then up here 200, 300, 400, whatever. So we might be in that range where I can get cheap IV anymore. GME is moving up a little bit more here. I don't have a huge amount of calls, but thankfully I don't have any cover calls. It's 10:30. I like this volume that is increasing. This is how it starts. It starts slow. It never starts fast. It doesn't just like turn on. It starts slow and then ramps in. This is what we saw on whatever the other day was. This day happened later in the day, but saw the volume start to pick up green, and it was inversing SPY. So it can go with the SPY, but if it's inversing, that's another sign that it's showing strength in a weak market environment, basically. But it didn't inverse SPY for long. SPY turned around and started catching up with it then. So this was moving with it. But increasing volume. And as we saw earlier, GME wasn't moving with SPY much at all, so to the upside. Okay, more volume on this 5-minute, that's good. Melting up. We've got 2209 I have for resistance. I kind of want more calls. Suck it, Goldman. Dumb new money. Got that new dumb money, dog. So I got 24 strike, a little bit further out of the money than I got before. So these will be potentially higher percentage gainers if it rips, but more susceptible to theta decay if it's slow or if it comes down especially. Yeah, because 24 I'm going to want to move at least to like 26 or so soon. About to move to 40, I mean, that'd be very nice. Yeah, so that last 5-minute was actually more volume than the one before. And now we're on the next 5-minute candle. Still good volume, little red, but still good volume. Moving with SPY a little bit, but outpacing it to the upside, I'd say. Since right here, since 10:30. This is a nice hedge against my short on the market. My MES shorts are, I'm losing on those as this goes up. Should have closed them down there. Oh well. Probably end up holding them through FOMC now. Try and get a quick sell on a big dip when the data comes out. If we get a big dip. Looks like this 5 minutes is going to give us more volume also. So similar to the other day, our volume just keeps increasing, or even, yeah, it gets to an elevated point and then stays there as the day progresses and doesn't decrease like typical, that'd be a good sign. So if you look on like, I mean, SPY got a little pop-up volume there too when it ripped up, but overall it's just kind of trending down. This has been trending up for a bit. Thank you guys for your likes. Appreciate it. Only 2 of them. SPY melting up. Up 0.5%. AI is up 24%. Stitch is up 14.3. Nice little breakout actually there on Stitch. Megaphone bottom gives a price target of 650. What's the time frame on that? Yeah, that could happen. This chart actually looks really nice on Stitch. SFIX. Okay, looks like it's moving with SPY still pretty close. Need it to keep the volume up and outpace. But I'm still optimistic for today. Carvana going up. Down 1.7. If it holds some supports, maybe. I'd like it to hold that 9.5. Good, yeah. Good, needs to hold some supports. Okay, good volume here on this last 5 minutes. A little bit less than the one before, but elevated from here. Need to kind of keep picking up though. Eyes moving up here. Huh. Volume is slowing. Somehow my calls are still up. Spain's Prime Minister Sanchez, we will raise minimum wage by 8%. U.S. money supply, treasury curve, and leading economic index are all signals that a hard landing will occur in 2023 for Bank of America. BBBY is moving up. GME's volume needs to keep increasing. U.S. Treasury has no indication that U.S. funds were misused in Ukraine. FDA says ending of COVID public health emergency has no impact on existing emergency use authorizations. Dang, GME, come on. Don't shut off now. U.S. rents fell 0.4% in January, the fifth straight monthly decline. Year-over-year percent increase has now moved down for 14 consecutive months after peaking at 18.1% in November 2021 at 3.3%. This is the smallest year-over-year increase since April 2021. All right, I'm stuck in these calls. Yeah, I can't close them. So I've got some call exposure for next Friday. That's good. I like it. That cover call I did this morning, though, I don't think I had a problem with that. Whoa, nat gas popped up. High is moving up here. New high almost. Not quite. Jamie's volume, though, that is good. This 5-minute volume is increased. I haven't seen the price action yet, but could still come in now. Could just bounce off VWAP there. I'm gonna hold these calls till at least tomorrow. All right, that's good. Chiefs or Eagles? Is that who's in the Super Bowl? I mean, probably go with Kansas City. But as you just heard, I didn't even know who was in the Super Bowl, so my pick means nothing. New high on the SPY here, up almost 0.6%. It's erased a lot of yesterday's losses, actually. Yeah. So I like that volume in the last 5 minutes. It's increasing. Good to see if this volume is the same or even higher. If you look on SPY, it's not increasing, decreasing as time goes on. You might get pops of volume in there when it breaks resistances, especially. But overall, as the day goes on, without news, it'll kind of decrease and find a level it settles at. GME's continues to increase or even stay flat at an elevated level. That's a good sign of a rally. AMC get any move from this? Yep, a little bit. SPY new high. BBY is not feeling it at all. 7% down. This is good volume. Be good if it was as much as last 5 minutes. Few minutes left on this candle. SPY's moving up here though. That hit right at that line pretty much, 2209.
I actually haven't looked at Apple yet today.
It's all right.
It's basically flat,
It's
so it doesn't seem to be having quite an impact on Apple, but obviously a supplier of the glass to companies like Apple. Shares are down despite reporting better than expected earnings and revenue, but offered a pretty disappointing outlook. Adjusted EPS of 47 cents beat analyst expectations. Revenue fell to $3.63 billion. Still came in better than forecast despite what the company called recession-level demand. Specifically saw a sharp drop in display technology sales. Those fell 17% year over year, driven by lower glass volume. In terms of that disappointing outlook, though, for the first quarter, management expects core sales in the range of $3.2 to $3.4 billion. The consensus on Wall Street was $3.57 billion, so a miss there. Meanwhile, forecasts EPS in the range of 35 to 42 cents. Wall Street was hoping for 46 cents per share, so a miss there as well. The CEO on the earnings call said even though the pandemic-related disruptions in China are currently impacting the television, automotive, smartphone, and IT markets, will be ready to capture growth when consumer demand returns. So China reopening could be, give this stock a boost, giving up some of its January gains, but still up about 9% so far this year. So down day today, but still positive so far in 2023.
Okay. Yeah, down, but to your point, nice little lift off here on the year, up to the highs from August last year. We're seeing many of these companies take a bit of a breather once they get to those levels. Perhaps that's the case here. This is a pretty big sell-off, though, and decline potentially China-related. But to your point, one to certainly keep in mind ahead of Apple. Thanks, Caroline. A bit of a sleeper story here today. Down 5%, Corning Glass, important Apple supplier, taking hits. Okay, Apple on Thursday. Let's talk about the situation with Dan Grant and Michael McCurr on my panel this morning. Dan's senior specialist at retail trading. Mike's director at Schwab Advisor Services. Good morning, guys. So we've got a lot of earnings discussion. You guys are more macro dudes. Let's talk some macro ahead of the Fed. Dan Grant, bonds. Are we ever going to get away from 3.5%? This is killing me, man.
It is going to
bonds are doing nothing.
It's going to be continue to do it. And that
ripping up more.
So you have actually
60.
curve steeper out.
GME.
So there's a chance that we could see
still good volume.
3.5%. But
not really seeing the price action yet.
Long-term rates are short-term rates are lower. Long-term rates are higher this morning.
Right. Yield curve continues to flatten. Today we get a little bit more flattening.
Very inverted right now. It's less inverted than it was. So we're still sitting at 111 basis points.
We're off lows for the yield curve.
Yeah, 3-month to 10-year notes still sitting at 111 basis points.
Okay. So the low, by the way, in the 10-year to 3-month that I watched was
getting a red candle here.
Just 3 weeks ago, 2 weeks ago.
Bit of a rejection on this. That's a pretty big red candle.
Had the smallest
There's a resistance from yesterday at 403.39.
Powell talks, the ultimate result. Well, the ultimate result of everything the last year has been yield curve flattening. Does that happen again here, Mike?
If it does, I don't think we see too many more months of it because we're getting close to the ceiling or that terminal rate on the Fed funds. Just based on, the inflation data that we've continued to see, that disinflation has continued to happen, I think we're getting close to that ultimate resting point.
Cover
for
calls
the
might
Fed
have been a
funds
fine
rate,
play.
terminal rate right around.
We'll see, though. I mean, it's up 3%,
The
not
yield
bad.
curve re-inflect higher, which could
Volume has
benefit some
increased
cyclical
since 10/20,
stocks, unwinding
good
of
sign.
that flattening trade. And I think everyone on the street expects the 25 basis point hike
good.
tomorrow.
Could be
That's a
good still.
99% probability based on the
M-GAM.
Fed funds tool. But I think
Holy
everybody expects
smokes.
Powell to be
64%.
hawkish in his language. But
What in the
when everyone
world?
expects something to happen in the market, how often
Some
does
of these
it
gaming
actually
stocks
happen?
going crazy.
So I'm wondering. Yeah, well,
Takes
I'm
consensus to move
Regains
price.
NASDAQ compliance.
I
Reverse
wouldn't think
split.
so. I think
They just reverse split.
antithesis of consensus is generally what causes volatile price action. So I think there might be an opportunity
that
that
was-
the Fed
that
could
was a long time
ultimately
ago.
acknowledge some semblance
I don't
of
know why this thing's
progress
going.
on the inflation front. So
What would that sound like to you? Him saying that we do 25 and 25 and stop?
I think so.
Or maybe just
something
25?
something close to that, what the market is pricing, but he actually has to audibly acknowledge it. And then I think that would be a green light for many risk assets.
The
And I don't
GME
think
hasn't
many
really
people
moved down the
expect that to
same
happen.
as
Usually under
on this
5%
move.
Fed funds.
No, I think 5% and acknowledging the progress we've seen on the inflation front, because so far the market has acknowledged the inflation progress. The actual numbers are coming down, but the Fed has not changed its tune whatsoever.
Is that because they're more focused on the level of inflation rather than the direction?
I think they don't want to be burned again with what happened with the transitory language.
Right. And that's what I was thinking this morning as our guest was talking about Powell's desire to preserve his legacy by getting inflation down, because he's already gotten one strike at least with the transitory stuff. What do you think, Dan? A potential for a dovish surprise?
Gosh, I hope so. I really do. I hope they back down a little bit and
This is
say.
an earnest response.
I just want them to be.
How much TLT are you buying, Dan Grant?
Well, yeah, I mean that's a actually great chart, right? If it does continue to break up, right? Does it continue to break out from this kind of little channel that we've had on the TLT? I don't believe the Fed can go above 5%. The market doesn't believe the Fed funds. Well, it just based on the way that the economy's acting right now, right? We've pushed so hard over the last 8 months, right?
Too fragile.
Right. We've gone up 450 basis points or 430 basis points in the last 8 months. The market's got to, and they're destroying asset prices. They destroyed the housing market. How do you come off of that?
Asset prices are coming back.
Asset prices have not been
great. Is
destroyed
that
in the
a
last 8
problem?
months.
No, that's a really important
It's
point.
just
To
stopped
your
on a
point,
moon
though,
mission
because
that was
this
unsustainable.
argument in October,
still extremely
I
high.
think, carried more
Housing
weight.
prices are still
We are quite a bit
100%
off. We are now
elevated from
looking at the S&P 500.
last year.
We first reached this level in May last year. So
it.
obviously we had our low in June, another one in October, which was the low. So you had a trend that bottomed out in October. But just the S&P level here, here's your chart, Mike. I mean, you know this. We're back at May. So if Powell is looking at the stock market, which we know Kashkari is, we know that people who speak with Powell are watching the stock market. They've told us. In fact, he told us last time, Powell, pretty specifically, that asset prices do play a role in loosening the economy. They don't want the economy to loosen too much. Will Powell feel he has to play hardball and blow up your dovish
Yeah, the gaming
belief
stocks,
because
SLGG's moving
stocks
up
are
too.
trading the highest since May?
Phase,
So is that telling Powell
all these
that
gaming
he has
stocks.
to go back to where he was in May?
God, no. But are you saying that the Fed targets asset prices?
Oh, I've always been a believer.
Well,
of this.
it's a factor it's a function within financial conditions.
Yeah.
The Fed doesn't want financial conditions to loosen too much, but outside of
There's a
asset prices re-inflating a little,
NFT gaming
you could
company
argue
is
that,
IPOing
some
tomorrow.
Financial conditions
Or no,
are not
sorry.
loosening to the degree
IPOing
that
on the
asset
3rd.
prices are.
Okay.
On
And
Friday.
Housing's, look at the home builders
If the
right
gaming
now.
sector is
Yeah, well,
rallying,
I mean,
that'd
look
be
at
a
all the
good
new
IPO
home
to jump
sales.
on.
The housing market is undergoing a recession right now, and rightfully so. The Fed was responsible for blowing
it's
that bubble
IPOing, or
in
is
the
it?
housing market, given
Yeah,
that
it's
it was still
IPOing.
buying MBS in March of 2021. So
Home builders highest
Ticker's
since
NFTG.
February last year. kind of looks like Powell hasn't done jack squat.
Well, look at the actual hard data. I would say that's a little bit perplexing, but from an index perspective, the S&P has validated its breakout. Above that downtrend resistance line, you got a textbook 3% pop and close above that level. So, medium term, I would argue that the technical trends have changed considerably. We'll see what happens tomorrow.
All right. Well, last time we were here, you put the Whaley Brett thrust on our radar.
and
we're thrusting, baby. All right. Thanks, Mike McCurr and Dan Grant. Great combo, guys. Trading 360 with Nicole Pedalides is coming up next.
Just consolidating up at these levels. But yeah, game stocks are doing something. Some news. All running. Phase, SLGG, MGAM. I think GME might have a big move today still. I think it could. Might be biased because I closed my covered calls and went long, but I'm liking this volume increase in this last hour. AI 25%. Five breaking out here. 11 a.m. pop. For data right now, what's going on? Pretty big move up there. New high. Jimmy's volume's tapering now, not good. To stay elevated. Was there no data or anything at 11 as far as I can see, but it's a pretty big pop there. Record cash levels show investors remain unconvinced by the stock market's bullish transition in 2023, Bank of America says. Lebanon to devalue its currency by 90% on February 1, central bank chief says. Wow. Lucid's up 2.6. The chart looks pretty nice, actually. Even on the daily. Options still crazy, yeah. Maybe a spread. Every time frame has some kind of bull flag. 5 minute has that one. Hourly has that one. Daily has this one. SPY almost a new high. Yeah, laser looks nice too. I know J Hart's been hyping this one up. Oh, SPY, new high on the day. Back up to yesterday's levels fully. A nice looking bull flag. Laser. This is EV space, right? Yeah. Tesla's up 4%. Wow. Yeah, stuff's rallying today. Mullen 6%. MGAM came down. AI still holding up high. Phase gamers are still going. It's everything but GME. Like the gaming and EV sector. BBBY down 8.7. It's almost erased all of the gains from yesterday. Gaming and EV sector going kind of crazy. I might jump in on some of this action. Maybe laser with the debit spread. Yeah. Something safe, I'd say next week. I guess 6.5 and 8. Let me see where this thing's going. It breaks out of there. Probably 8. 8 would be pretty conservative. Could definitely keep going up, but 8.5. Yeah, like 8.5. Little headroom. I'll do 2 of these. Get a red candle coming in somewhere. And I'm gonna look at beyond. We still get squeezy moves. Beyond should be in there somewhere. Send consolidating nicely up there. Gonna grind up. GME inching up. That's good. More volume here too. A lot more. Got a volume spike, yeah. Yeah, I feel like GME might break out. Break even on this laser play would be 6.99. Jeez, thing's not chilling out. AI is up 28%, new highs on that. MGAM consolidating up there. SPY's up 0.65 now. Anthony Scaramucci's Skybridge investors asked to withdraw 60% of a top fund's capital in the September 30 redemption period, but it only returned 10%. Front row. You can do it. Everything's going besides GME so far. That's good volume though. Just need to get a little pullback, get a fill on it. Phase up 21%. Gamers are going crazy. SLGG, liquid. There's Avia. Kodak is up 5%. Clove. This chart looks like lasers. We're getting some of the squeezy ones up. QS is up. ASTS. Yeah, now I'm starting to see more charts that look like lasers, kind of bull flags. Bubo even. Got a nice grinding chart. Bubo could get kind of wild also. These are all T+2 moves. Seems like Wish. Yeah, Tuesday after OPEX. If I should get some Bubo. Wait on that one. Am I gonna fill in laser? Okay, I got filled. Probably at a pretty high, but I'll put it in trades. Oh, Jimmy took a big red candle with that one on SPY. Not a good sign of untethering. However, our volume has stayed somewhat elevated as the day's gone on, which is good.
Are being maintained, and then also their guidance that are still expected to be maintained for active stock pickers. Those are the companies we think that leadership will continue as we move on.
Yeah, big week for earnings. Lots of news. Rob Fleming, thank you.
What's up, Eli?
Senior market
morning.
analyst with the Schwab Center for Financial Research. Plenty more to come right here on Trading.
Thank you guys for your likes. We got 25 of them.
That conversation all about the Fed. We catch up with the head of economics over at Macquarie. And our disruptor connection to the electric vehicle space. We'll find out more about lithium, America's
rally. Yeah, that's not good looking on GME. Just ugly illiquidity. Huh. AYRO up 8%. All in 7.8. Bay still holding up 21%. Damn. Kind of consolidating up there. SPY's coming down here a bit. maybe found its top. One of these highs from yesterday, these little peaks. BBBY down 9%, yeah. I guess the rally kind of started like 2.5. At 2.6 now. Yeah, GME still pretty not very bullish on the SPY. SPY definitely outpaced it in this time frame. Increased volume is better, but not a ton of volume yet at all. SPY holding right back up. There's a reversal candle on GME. Look at the gapping. What the heck? Ryan Cohen should try and get GME off of the options market. Even just news of that happening, I don't know if he's able to, but news of that happening could cause a crazy squeeze. And if they actually do it, imagine all the unwinding of crazy options. Software engineer and data science job listings are down 24%, 27% from last year.
Looking pretty good. We're having some decent earnings reports. We're having GDP and things like that are giving a lift to things. Now we're going to have to get through Wednesday before we get confirmation of that if the Fed is thinking like some people like me are thinking. But I think after that, either they're going to put the kibosh on this and just say, hey, listen, this isn't enough. We have to get more aggressive. I don't think that is going to happen.
And again, we'll back up to VWAP.
We have a bunch of, you talked about in your last segment, a bunch of big earnings. If those are neutral to bullish, I think we have a lot of room to the upside.
Oh, that's good. All right, that takes us to Airbnb. Tell me about your first thought here, and we'll get to your trade in a minute.
Yeah, so Airbnb has shown some strength here, but what we're seeing is that it does seem a bit toppy. I don't want to turn around and say, well, since it's not bullish, it's bearish. But I think that we're kind of topped out because they do have earnings coming out later on in the month. And so I don't think that we're going to get too far away from here. So that screams to me an iron condor sale. That's what I'm looking at there. But if I had to go one way or the other, I would be bullish on Airbnb.
Understood. Okay, what do you think here, Ben, when you take a look, when, thinking of a neutral trade here?
Well, I've seen a nice run up in Airbnb so far this month. We're talking from 81 up to 118, and I'd have to push back on the potential topping out scenario that was just laid out there, because I think there might be some room to run maybe up to the 130 area. I'll show you why in just a second when we look at the daily. First and foremost, the move I mentioned, this is an hourly candle, so a more intermediate time frame, but a well-defined trend environment, bottom left corner to top right corner, and I went ahead and identified a few areas of consolidation separated by these areas of vertical development. Now, what I wanted to direct your attention to was this area here where we break up and through the 88 level and then kind of fall, go sideways around this 102 level. But notice how within this area you see multiple different repetitious, again, the exact same pattern playing out, and then we kind of taper off around this 102 area here. So just kind of pointing to this really well-defined trend with very little retracement, and it does appear as if we're starting to form a bit of a balance here right around this 114 area now. Taking a further step, looking at the daily time frame, this is where things get a little bit more clouded, and let me show you exactly what I'm talking about. Here I've got two areas of well-defined consolidation. So first and foremost, you have the one that formed, and this is a very well-defined, very elongated pattern that played out 180, 190, we'll call it, was the balance area that we rotated around. Here we're rotating around this 100 area. Again, lower extreme, the lows we just came off of, but this is why I mentioned a little while ago we might have potential to see a lift to 130 here. We've got some energy through the middle of this range, but even as I look at this, you can see again, just look at the two areas that I went ahead and identified, two areas of consolidation here. Hold on, give me this, sorry. 165, 105. So we're through the middle again with energy. I always say opening up a door for a potential retest of the upper extreme. Checking in on where things stand in terms of the 50, the 200. We're above the 200-day moving average. We're getting a nice lift through the 50-day moving average with this run up that we've seen. And look at this. We're seeing some enthusiasm here to the upside with the RSI taking out some key levels, some highs. So price is actually lagging a little bit from the RSI. Again, sort of suggestive of that scenario or that narrative that we could see a run here to 130.
Really weird.
All right. I like how you drew those that staircase up, and a good big picture there.
A staircase.
My final thoughts on Airbnb.
I'd like put an order for a future.
I think Ben and I are
it said it filled, but it's not showing up
on this one. Like I said, if I had to pick one way or the other, I'd say higher.
Okay.
I don't think that we're going to make appreciable new highs before earnings. We have earnings on the 21st. So I could see a consolidation in here, whatever it is. I don't think that
money.
we're
What?
going to go up and make new highs unless the market just absolutely takes off. So that's where my opinion on kind of a sit and hold, wait for the news, and then you could definitely see some more.
I just see Bank of America has a neutral rating target to 130 from 125, and Barclays has a target to 105 from 103, also equal weight rating. Let's get to Seagate. $66. Seagate Technology. Mike, why is this one on your radar?
Yeah, so I like this one on the positive earnings. I like these plays. Positive earnings and then playing off of the bottom of that gap that forms after earnings. This gap bar fill, not filling the gap, different, but coming back to those lows, testing those lows, and then taking off with that. I mean, I love the space. I love the company. And we're getting to a place we're flirting right at the 200-day. So as far as you could even, if we don't go back and test that bottom of that, you could even play it on a breakout, but I'm playing it on the pullback here.
Okay. What are your thoughts, Ben, when you take a look at Seagate Technology?
Seagate, much like Airbnb, Nicole, trending to the upside on the more intermediate time frame, longer term to the downside, but this run-up that we've seen, we're talking about from the $50 level all the way up to 71. 71 is a very key move, and I'll show you why when we look at the daily time frame. It's initiative relative to what we just talked about with Airbnb, which is still relatively contained, potentially working its way to the upper extreme of 130. But here you can see in terms of STX, a big move throughout the month of January, much like what we pointed out in Airbnb, and a lot of stocks have seen this, right? A rally, bottom left corner, top right corner type price activity with areas of consolidation that formed at higher and higher levels. I went ahead and just kind of mapped them out here so you can see a well-defined staircase pattern. The reason I like these again is because as we're forming this area of consolidation, you have that reference point below to determine. As long as we hold above that prior area of consolidation that formed relative to the one that you're currently forming, if we keep forming higher and higher areas of balance, it just solidifies that working assumption that, again, the market's trending higher, that value's moving higher, and in this instance, zero rejection of that. So currently forming an area of balance, it looks like around 68, taking a step back from this intermediate 1 hour candle look at the market, the rally we've seen throughout January, I wanted to point out. Now, as I mentioned, a very similar pattern where we saw with Airbnb, longer term daily candles, we've been actually trending lower. And in this instance, we can see a few areas of consolidation that have formed at lower and lower levels. Let me just make sure I have the right drawing tool here so I can show you. We've got, well,
market comes down after that.
Area that formed. Again, we're talking into the end of 2021, beginning of 2022, kind of a smaller area in March, February, March of last year, April, May, June. I guess in some ways you kind of just want to draw this all as one. But then look here, we kind of just started to form this lower area, and notice how we're not only taking out the upper extreme 60, which will coincide with what I was talking about as far as Airbnb around 130,
down a little bit,
also taking out the middle of the area balance formed August, September of last year, up around that $68, $70 level. So this, again, not necessarily what the bears wanted to see. This is somewhat bullish here. It's reversing the trend to the downside at the very least, taking a step back from what we're seeing in terms of that trend to the downside. And speaking of reversing, look, above the 50-day moving average since the beginning of the year, just recently taking out the 200-day moving average, that longer dated, and another instance here where RSI very supportive of the run-up we've seen. There's some energy in this move to the upside, to say the least.
All right. Thank you so much for that, Ben. What a great look in the energy that he's talking about. Any final thoughts on Seagate before we get to Wayfair?
No, I'm just happy that we're about as close to 2 for 2 as we've ever gotten. So let's see what happens number 3.
Oh, maybe we should end the segment now. No, I'm kidding.
Yeah, that's it.
We have to get to Wayfair. We have to get to Wayfair because Wayfair is around $60 here. You know, we think about the consumers still shopping a lot. Your thoughts on Wayfair?
Yeah, this one's a breakout scenario. So I'm going to need the market to do a little bit of the tough work for us to actually take us through about 1% higher than yesterday's highs. But if we do that, then I mean we're in clear breakout mode in this one. It fits with everything. Consumers spending money on not bargain basement type of housing type of stuff. It's not high end stuff or anything like that. But the fundamentals of the company doesn't go against anything. I'm not making a specific thing on a fundamental thing about Wayfair, but. So if the market can take us up a little bit, I think we got a ton of room to the upside in Wayfair.
Okay. What do you think here? I mean, are we thinking that people are going to shop till they drop, Ben?
Cole, we were talking about some of the energy we've been seeing in these other two names. Look at the move up we've seen in Wayfair.
GME's volume kind of shutting down the last 10 minutes
or so. The month of January, from 31 all the way up to 65, and zero rejection of this upper level. Another, again, hourly chart where we've got a very well-defined trend environment. We're talking bottom left corner to top right. Zero rejection of this upper level. And I just didn't want to get too granular here. I would do two areas of consolidation that your eye should be drawn to. But again, another instance where we could draw easily one that formed here around the 46 level. But just on these two bigger picture areas, 41 up to 58, and look what we are consolidating right now. Again, accepting this recent move we've seen throughout the month of January. I wanted to take a step back and not only point out that we haven't seen any rejection of this move up, but I want to show you how much like the other two names we looked at. Very much counter trend to what we've been seeing to the downside. Now, I want to show you these areas that I'm focused on here in terms of this stock, Wayfair. We balanced out around, well, upper extreme 369, lower extreme around 220, so we'll call that around 320. I'm not going to get too granular specific in this. It's more a channel to the downside, but you can see what we find in many of these well-defined trends. You get the breakdown, the sideways consolidation, but again, I don't want to get too granular, but what I will do is draw this area that's been forming basically since May of last year, which is very reminiscent of what we've seen in terms of the broader market, right? We've been kind of balancing since May of last year. You have the August highs, you got the October low. Wayfair, almost a perfect example of now. It's a little bit strong relative to the broader market, just still kind of struggling with that D's high. But look, we're just to the middle of this range that's been forming, so to a pivotal area here, but still struggling to get through that with energy like we saw in Airbnb as it's nearing that 130 level, and like we just pointed out in terms of the recent move up in STX as it breaks out of the top of that range that it's been forming at this lower level. So just kind of pointing out the areas of consolidation and how it looks like Wayfair kind of struggling again on the bigger picture here, trending higher on the intraday, much like both the names we've looked at, and similar pattern here. Taking out the 200-day moving average in the month of January, holding above the 50-day moving average. Look at this, another stock that RSI, conviction to the upside here. I mean, very much supporting these moves we've been seeing.
And you know, in the meantime, we've seen yields bend. We've seen yields slipping ahead of the Fed for tomorrow. Any thoughts there on what you're watching when it comes to the S&P 500?
You know, I'm focused on the fact that we haven't taken out that DECE high yet. If you're looking at the SPX, I think it's around 4,100. If you're looking at the futures, it's around 4,180. You know, Mike answered the question earlier, and he was talking about the Fed and some of the other fundamentals. For me, it's all about the technicals. That's why I think it feels like still, you know, we're ripping off the January lows, Nicole, which is a continuation of the move we saw off the October lows. But until we take out that December high, this market, this move up, still relatively contained in the month of January.
I see. Any final thoughts, Mike?
No, I think that sums it up pretty good. So you know, the big things to watch now, not so much inflation, but do watch. I know the Fed is going to be looking. They looked a lot at that ECI number this morning, and that's going to figure into that. But now, good numbers are good numbers. Where before, good numbers meant inflation. Inflation seems to be in check. I mean, obviously, you know, your next CPI and PPI and all those things are going to figure into that to see if that trend continues. But I don't think the Fed is going to get in the way of any move if it makes sense from a data standpoint.
Yeah, excellent. Big three: Airbnb, Seagate, and Wayfair. Mike Shore, Director of Trading Education, Prosper Trading Academy, and our own Ben Lichtenstein doing a great job on those charts. Thank you both, gentlemen. Coming up
Ben
next, we're going to spotlight the Fed.
Lichtenstein.
Tomorrow's FOMC decision is key. In focus.
Hi, grinding back up here.
With everything you need to know ahead of Powell's speech.
GME,
Ahead of the Fed.
so far just confirming
Right after this.
one of these consolidations periods. Which one will it be? Here? Or here? But I'm beginning to think GME is kind of broken. I think we broke it. We wanted more shares and we broke it. Hey, down a row. AI's holding up nice. Phase has been breaking out even more. MGAM new high. Look at that thing. Biking. SLGG. Not so much. We'll see. Maybe Jamie's waiting for tomorrow. A lot of stuff isn't, though. Clove. Emvis. Build-A-Bear. Sauna. I haven't seen these in a while. Bear still looks good. Laser still looks good. Even GM's up 7% today. Almost 8. MGAM 77%. He's ripping. all about when the volume comes in, you know, the day's not over. So you know, all the volume come in that last hour. It can still be a huge volume day. But yeah, this morning up until like 10:30, it was low. And then it started picking up, and this is where I closed covered calls and got calls. And I still think that's probably the right direction, but it has settled down a little bit since then. Prime. Just prime. Oh, EU closed 2 minutes ago. Maybe SPY rallies on that. Huh.
But new net orders slid. They decreased by 41% year over year because of higher mortgage rates, because of the homes that became less affordable to Americans who are constricting their pockets now. Their pockets are constricting. And also lower consumer confidence. It all slowed demand down. But moving forward, CEO Ryan Marshall says that Pulte Group remains focused on driving that operational performance.
Yeah, Pulte?
And ensuring that appropriate cadence of production
those home builders ripping today.
as it comes with demand, and also
like
intelligently
that,
managing
data.
the balance sheet.
You know, as I'm looking at all these names, so many of them are at or near 52-week highs, and you have to wonder with the volatility that we've seen in this group, why that is. And I will tell you, Renita, that was a great report on Pulte Home. Thank you for that.
Thank you.
I will say yesterday on our show,
Pulte,
we had Joe Tegay, and he was not hot on this. He was actually shorting it. He said, I don't see any reason why Pulte should be at 52-week highs.
We'll see what other
We'll have to watch for that.
Yeah.
I agree with that, actually.
Nice
Sorry,
to see you.
Pulte.
Thank you.
Thank you.
Renita Young, Senior Markets Correspondent for the TV Ameritrade Network. It's time to spotlight the Fed. Two-day Fed meeting begins today. The Federal Open Market Committee is now talking about what we can expect for that decision for tomorrow. David Doyle's with us, head of economics at Macquarie. Thank you for joining us. So most people are expecting 25 basis points tomorrow.
Not true. That was priced in still.
Well, I mean, obviously that's what most expect. You think that's on point?
Yeah, I think that's the right call. We have 25 basis points, like a lot of other folks. That's been well signaled, we think, from several of the speakers from the Fed, participants at the meeting. There's also something that we think was foreshadowed when the minutes from the December meeting were released earlier this month. It's very clear that we've had a further deceleration in inflation. And I think that supports decelerating the pace of hikes down to 25 basis points. So that is our expectation.
That's a good point, though, as the building materials came down.
Meeting.
It helped their margins.
Right. I mean,
but now we're, looking at,
let me ask you this.
They're desperate to dump all these houses they built.
Still. What do you think? Would that be
MGAM, 103%. Yeah.
Well, I think that would be quite the
breaking
shock
out
to
big.
Financial markets. If you did see that, I suspect that you would see a pretty sharp sell-off in equities and in risk taking and a risk appetite. Keep in mind that this Fed doesn't seem inclined to surprise the market. If you recall back when they accelerated the pace to 75 basis points.
Yeah, I think about the material costs. That
there was
coming down definitely did help.
Wall Street Journal article that was released earlier in the week
Helps
to try to drive
build houses that
expectations
they can't sell.
upward. The fact that we haven't seen that this time around, I think, suggests that it's very.
I might want to make a new high
a
here.
hike of 25 basis points, but again,
GME,
if you saw something like 50,
thank you for being up 2.75%.
I think would trigger potential sell-off in markets.
Broken.
And I know you're watching the path of jobs and also looking at other things like the growth rate that we are seeing, earnings expectations. Do you think there is a possibility this is our last hike, at least for the near term? Maybe we get a pause.
Yes, that's our baseline view. We think the data are deteriorating in the U.S. You've had a couple of months in a row where total hours worked in the economy has contracted. Real consumer spending has now contracted for consecutive months. The handoff from the fourth quarter of 2022
Watch something exciting like
MGAM 2023 looks very, very weak to us. We actually think the first quarter will
at
be
that
a
thing
negative
move.
GDP number. So we think by the time that you get to the March meeting,
New high
the
almost.
evidence will be there for the Fed to move to the sidelines and to be on pause or on hold for potentially for several months. And we think that the hike that we're expecting at this upcoming meeting or upcoming decision on Wednesday, we think will be the final hike of the cycle as a result of that view on where growth in the economy is heading.
Talking
I
GME.
think we're going to hear the same language.
Yeah, GME's a nice
tight
uptrend.
labor market. The consumer is still resilient.
Unusual.
I don't know that I'm going to hear anything different than
It's
what
broken,
I heard.
great.
And I'm also keyed in onto Friday's
want
jobs
confirmation.
report. I know you're watching wage growth. I know you're watching labor force participation rate. Tell me some phrases and things you're going to be watching for here tomorrow and then on Friday.
Yeah, so I think tomorrow a couple of things to watch for are, does the description of growth change? So in December's statement, economic growth was described as modest. That is inconsistent with what it was described as in the Beige Book, where it was largely unchanged. It's also inconsistent with some of that economic data I highlighted earlier in our discussion. So I suspect that you could see that growth description downgraded. The other thing to watch for is the Fed's forward guidance. So in their previous statements, they've always suggested that they expect further rate increases will be required going forward. Does that change at all? I suspect it won't, because I suspect they'll be reluctant to loosen financial conditions. But it's possible that it's adjusted in some way, shape, or form to indicate that the Fed has become more data dependent. As for jobs, which you also asked about, I think the big thing to watch for on Friday will be what happens with the revisions. So this is a big report once per year. The BLS updates all the payrolls numbers going back 5 years. So in particular, the last 12 months, we'll be interested to see
Faze
the
is
pace
ripping
of
with it.
change in payrolls growth.
All the
How has
gamers.
that changed relative to what we believe the case is today? And does that alter perceptions of how strong the labor market is?
That's a great point. I mean, the revisions should be something we watch
SLGG
more
still
closely.
getting it?
David Doyle, thank you for that as well. Good to see
Yeah.
you. Glad you were able to join us today. Head of Economics at Macquarie. Thank
Well, I
you.
would say it's rejecting that new
Coming
high.
up next, the disruptors. General Motors announced a $650 million investment into Lithium Americas. George Sillis
Oh,
is
that's
all
what the
over
LAC
it. He
run
will
is
walk
from?
us through the details next.
It must be. Yeah. Spotify's even up 11%. Global funding for payments startups fell 49% last year. A lot. 131% on MGAM. Oh man. Did they announce they're attacking shorts? I see no news on this thing. The 24th. Here to fight crime and fight naked short sellers. 140, 150%. So, in their earnings, GME talked about potential merger acquisition, right? Wonder if they're going to do that so that then they could do spin-off like GNS is doing. Look at those wicks up there. Global Central Bank update. Colombia hiked rates for the 12th time. 75 basis point increase to 12.75%. Ken Griffin of Citadel has said he would serve as Treasury Secretary, but only if the country is in economic trouble. Who decides that? Thank you guys for your likes. I appreciate it. Gotten to 29. Well done. Well, I guess it's a good thing GME's up 2.5%. Could be down 8-9% like BBBY today. Another layer of conflict of interest. That's true. If he kept his market maker company and his hedge fund. The Gam's cooling off a bit. Just wild. Pretty good volume. When's Bird's turn? Had a pretty big move off the bottom there. They need a reverse split. Get the squeeze going. That was 117%. That's disgusting. Wouldn't have even noticed. Look at those wicks on SPY. Probably a top there, right? I'm not sure, yeah. Maybe just been busy with work, Moon Pirate. I mean, he had a lot of shares, so it's like he could have blown up his account. They ripped up to like $5. I think he would have been. He was up a lot at one point. I think his average in like the threes. I think he had a pretty good position size. Looks like that is topping for SPY. Got a bearish MACD crossover. And then those wicks look like a topping wick. Let's see how GME reacts. Volume got shut back down on GME at 1120. Yeah, hopefully DeSantis can sniff out if there is any corruption in there. It does, just from a layman, it does seem like a conflict of interest to have the hedge fund and a market maker, and then to have him as a Treasury Secretary. Sniff out corruption. Yep. Not coming down. That gas bounced off VWAP. At some point, this thing's got to have some kind of rebound. You guys are talking about snow in Texas, and things just not had any reaction from anything like that. Any sort of weather.
of 21, 25. So effectively, the stock can move down about
Position to tank.
16% before you're actually at risk of losses on this trade,
Maybe.
which is again a pretty large cushion. But at the same time, you know, if the stock continues higher, a trader gets to still participate, but just not as much as you would effectively if you bought stock or went long call options.
Thank you for all of that. What important information pertaining to lithium and Lithium Americas in particular, which is rising as we speak. It's up over 13% now. George Sillis, thank you for that trade as well.
Sure, Nicole.
Coming up next, our panel's ready to look at consumer staples. Mondelez, they have a lot of delicious things in their umbrella. You'll learn more about that. The earnings release is due. We want to get some details. Next.
Chocolate. Expected more by now. Well, this might be the beginning of a long-term trend. Yeah, that deal with GM could be big. A lot of volume today on that. Taco Tuesday. Ay, 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 ay. Yeah. Like M game is settling down a bit. Days. AI hasn't taken much of a breath at all. Nice consolidation. Buy is coming down now. Edible. 31%. Oh yeah, reverse split, rip. One of you guys was in WISA. Oh shoot, this thing reversed. Had a reverse split also. Yeah. Hopefully the covering of calls was a good play. Evitel gonna wake up. Huh? Oh, not bad. Okay, 1.2%. We got like 8% to make up. The 2.5, 1.2. So the volume is picking up there, even yesterday.
Hey, Nicole. Yeah. The big theme I would say for 2023 is the impact of price increases and how much pricing
trade
power
SPX
a lot
if
of
you
these
can.
consumer staples names has. It's no surprise.
A lot cheaper.
Everyone
It's
knows
like long-term
just about
cap
every
gains.
company, every manufacturer has raised
Short,
prices in some
even if you're trading at
way, shape, or
short
form
term.
last year. And many of these companies will continue to benefit from these price increases throughout the majority of 2023. But on the other side, we have to see, how elasticities play out. Where do volumes go and trend in 2023? For a lot of packaged food companies, they're seeing mid-single-digit volume declines right now, and the likelihood is that those declines could get worse in 2023, especially if consumers start to trade down to private label or trade out of certain categories altogether. So that's the big theme there. But the big positive, I think, for a lot of these manufacturers is we could start to see the beginning of a margin rebuild. Last year, margins were down for the majority of the industry because of inflation, widespread inflation. But now we're at a point where price increases have finally caught up with cost inflation. So we're starting to see margins rebuild for a lot of companies in the packaged food space.
Some of that gaming action.
Yeah, That makes a good point. Lee,
Hi,
tell me
holding
about
this
what you're
level up here
watching
still.
for Mondelez in particular. Are you focused more on the negatives or the positives?
Wish is up
I
8%.
think two things are coming up, right? We
Yeah,
got
the
Mondelez
tax on
earnings
SPX
coming
are
out
less.
tonight, and then
They're,
Hershey's is coming out Thursday. So I think
they're the same
Hershey's has
percentage
been
as
outperforming
long-term
over the
cap
last
gains
year versus
opposed to
Mondelez.
SPY.
At least
You only
on
get
their
long-term
price
cap
action.
gains taxed on
But
it
I
if
totally
you
agree
hold it
with
for
Arun.
long-term,
I
like
think
over a
what
year.
the market is looking for is to see just how much
So yeah, it's
demand
basically
cut
less
is being driven by these
less taxes on
these price
SPX.
increases. Now, developed markets saw price
You
increases
pay
of
less taxes
5.1%
on
last
your
year,
profits.
but emerging market increases are over 24%. So now, granted, they're not quite as sensitive to rising prices maybe as developed markets. That has been the tendency, but that's still a big change there. Also, I would say, though, another positive perhaps is that I think the dollar has come down a little bit more than was expected perhaps in the last quarter. And remember, they get 80% of their sales overseas. So maybe that'll be a slight tailwind. As far as the private label goes, I agree with Arun. However,
I just consolidating up here.
That,
got the moving average convergence divergence
label
flipping bearish, but as far as price action is just
categories
consolidating,
of food
holding this
products.
level.
So I think they don't have quite as much exposure there.
Arun, tell me more about Mondelez. I mean, how does it compare? They have a lot of delicious foods. Some people may be looking for something healthier. There's competition in the space. But as you said, the cost inflation is coming down and there is a margin rebuild happening in the group. Tell me about
Oh, it's only
Mondelez,
60% of your profits?
Yeah, so in the packaged food space in general, I would say we're leaning more bearish on the sub industry, but we do have a buy rating on Mondelez. It's one of our few buy rated stocks in the packaged food space. Mondelez is predominantly a snacking company, and snacking is one of the fastest growing categories in the grocery store.
Who has to concern themselves
where you
with
want to
profits
compete.
anyways?
Mondelez also has a great management team. They
Just
really
buy
have a
SPY
solid,
calls.
consistent track record
Pay any
of
taxes.
execution. Really, in fact, Mondelez changed
sorry,
their
GME
strategy
calls.
back in 2018, and since then they've really outperformed competition, both in terms of organic sales growth and margins. And we like the things that they're continuing to do. They're continuing to reshape their portfolio. They made some pretty sizable acquisitions last year. Cliff Bars was a big one here in the U.S. They bought a company in Europe called Chipita. That was a big acquisition. They bought a company in Mexico and Latin America called Ricolino that really doubled Mondelez's presence in Mexico. And then right now,
they own,
currently
was it Cadbury? Is that chocolate?
Yummy
chocolate?
Their gum business. So they're constantly reshaping their portfolio, trying to target those high growth categories and high growth markets. And that's why we think Mondelez can consistently outperform peers and deliver those high single digit EPS growth compared to the rest of the peers, which are typically posting around mid-single digit EPS growth.
Because as you said, snacking has been growing. That was a bright spot for Pepsi, no doubt. And you have a buy on Mondelez, but
Is it an NFT gaming?
On some of the other names.
IPO?
There's so many names. In
Oh,
this
you're talking
group,
about.
Speaking
from GME.
For tomorrow,
I think there is.
So
they're early on it.
Such as Hormel, Mondelez,
and they're in a crypto winter and the worst bear market we've had since 2008. So nothing's going forward right now. But if they're situated and set up, or when money's flowing again and we're not in a crypto winter,
food stocks is Conagra Brands.
they'll be the leader.
On General Mills, we have a sell on Kellogg.
But they have to be well established and set up and ready for all that traffic and
one of the biggest reasons we have a sell on
expansion
Hershey is just because of its valuation. It's it's really outperformed. The stock has really outperformed peers over the past year and is trading at a sizable premium to peers. So that's our main concern.
Just have a disclaimer on there.
But yeah, to your point, we're generally bearish.
Yeah, so
on
this
the
NFT gaming company is
had a really strong
IPOing
run throughout 2022 as
And if this gaming rally keeps going, that might be a good IPO to jump in on. I haven't played IPOs for a bit.
But this year, I think it's going to be a much more challenging period for packaged food in general. I think we'll start to see a lot more consumer pushback on these high prices. And that's why we're generally bearish on the industry overall.
Yeah.
Like a minimal investment? On Webull, I think it's like $100.
I would just say one other thing about the margin issue that we've been discussing.
Yeah, Webull's $100.
28% of their employees in the U.S. and over 60% overseas do have collective bargaining agreements. So, with the increase in wages that's going on, we'll just have to watch to see how that plays out, because that could
coming
further
back up a little bit.
compress margins if they really have to pay up when those contracts come due. So that's
I see what you mean, Don. I mean, that's kind of why I shorted it here, thinking it's a top, and so it's set up for a crash from FOMC. However, it could easily break out too, because if it is bullish and then we break, it's a big technical level to break.
Tomorrow. Thank you for that. That's going to do it for us here on Trading 360. I'm Nicole Pedalides. Thanks for being with me. All week after the bell, we'll have a lot of earnings for you as well, so I'll be there.
Still holding my micro ES short. I'm riding it. I'm riding that thing till it expires, maybe. See where it expires at. MGAM early? We've traded before. I didn't get into it this time. The thing is, like, this thing has been more or less awful since IPO. I think it was a SPAC too? No, just IPO'd. So it's had some spikes, but even if you bought in here, like, you're not up crazy amount. I don't know. Yeah, big move though. But coming back down quite a bit. Crazy the range. Once you go up 150%, it's like it'll drop 60%. It's still in a nice consolidation. That's wild. This is still looking good above VWAP. Pulling off, but that was a 60% haircut. Okay, GME, when is your volume going to turn on? 12? 12:25 is what we got the other day. If it does start to turn on, I'll average into these calls. Oh, you were actually talking about MSGM? I thought you were talking about MGM. Oh, another gaming one. Yep. But MGAM, so they might all be in sympathy of MSGM. This might be the original catalyst. Because MGAM had the... that news came out. That was a while ago. That was the 24th. That was last Tuesday. That was a whole week ago that they regained compliance. And I'm assuming they had a reverse split to do that, or no? They just got above it. I don't know how they get. Yeah, they just, I guess it's just because they came above $1. So that's not new. I haven't seen MSGM, but this, yeah, maybe this is from regaining compliance. NASDAQ compliance. That for equity exchange, so it dropped on that. I'll take care of GME, don't worry. Yeah, I haven't looked at this one yet. Another game. I wonder if they're all going in sympathy of this one. This is, I mean, this is insane. 730%. Because we've got all the gamers pretty much moving right now. Motorsports games. I did this one. I feel like I saw this one the other day. Maybe it was doing that. Dude, I hope this happens to birds. That's crazy. Oh, one day. Woo! Buy's coming down. See if it hits support here. If it breaks through there, probably moving back to VWAP. But see, this has been within compliance for a while now. Did they have a reverse split? No. Oh, they did. Okay. But that was a while ago. The reverse split was back in November. Maybe it's just some, I don't know, shorts covering mixed with momentum to the upside. Unless there was other things they did to regain compliance, which they hadn't done before, other than just their share price. Birds is out of compliance. This one could be a catalyst if it regains compliance. Birds, I might as well do my customary call buying. Whoa, big drop on SPY. Broke that support. GME hasn't quite moved yet. BuzzFeed must consolidate a good amount. That's right, BuzzFeed. Yeah, pretty good consolidation. Forgot that one was rallying the other day. I put this on my list. Let's get a little look here on the. Whoa. The fibbies. The fibsters. So that's 50% there. Look for a bounce maybe at this next level down. 2187. BBBY. I mean, it's not looking good. It's coming back down from that rally the other day. Still hasn't fully given back everything from that rally. Day-wise, I wanted to see it hold that 280, I think, was the level. Yeah, this level right here, but it didn't. Broke through that, so I mean, this thing's just moving on news basically, but it's in a downward trend for sure. Look for $2.40 to see if that holds its support. There's no more news that comes out. Probably just kind of keep bleeding down. Got bearish MACD right under the 9 moving average. But they should have news tomorrow, actually. Wednesday, they're paying their interest, or I think their interest on their debt. Or supposed to, so All right, GME's coming down a little bit more now. Moving down with SPY. Need that volume to pick up for a rip rally and pick up serious. And a rig buy 7 put expiring 317. Yeah, I like it. I think, I mean, if oil comes down, the market's going to come down. So you could say if you think the market's going to come down, you think oil's going to come down. And I would imagine oil price coming down should affect this stock. 317 7 put. Yeah, I mean you're in the money, so it's pretty safe play as far as your strike and your date. Let's see if there's any 96. You do have a divergence there also, which is a good bearish indicator reversal. Not huge, but it is. This high here, this high, that high is higher on the price, but the RSI is lower. And then this might be another RSI divergence depending on how the next day pans out. This is a higher price, but this is a lower on the RSI again. SPY bouncing right back up. So yeah, that seems like a good trade. With stocks like this that, well, made a pretty big move really. I'm gonna say they don't move very fast, but this has moved pretty fast. Here's how the options move on this ticker. Get big moves on the options or not. Oh, it's pretty illiquid. Definitely stick with the monthlies. It's 317, is that the monthly? Yeah. Yeah, that's a tight spread. That's nice. Yeah, I like it. I just picked up I don't want to say because I don't want you guys are fronting me. How many did I get? I got 113 of them. Wait, no, I only got 12? Come on. I had an order for like 200 contracts. Gave me 12, and then market maker bumped up the price. Stopped filling me. Yeah, it's not a bad look on rig. What did this rally start from? Earnings? Price of oil definitely hasn't been ripping like that. Huh. I'm just looking at some trades, some
Expect him to
leaps.
stay on point. The real question, the real variable
Looking
here,
at some
Tom,
leaps
is
on birds.
when you see 75 go to 50, you see 50 go to 25, the market's expecting 25 to go to 0.
Right.
And if it goes 25 and then 25, 25, if he guides for more small interest rate hikes, not sure the market's ready for that. But if he does acknowledge, some positives about inflation, it's going to be hard. He's got to stay on task. And like I said yesterday, I said the day before, he's dealing with 1.7 trillion in spending that hasn't hit the economy yet. And if he gets a reigniting of inflation, they'll blame him.
Yeah, and Randy, to that point, the market, having a good comeback here in January that gets, people's confidence about the economy, the markets, unemployment at 3.5%. This is a needle in the haystack that he's trying to find as far as a soft landing. But at the same time, if you've got the economy starting to heat up again, doesn't that just impose more inflationary pressures without, maybe that lag effect taking hold?
Possibly a little bit, and I think Kevin touched on that. The fact that the labor market is so strong, that we have such a shortage of labor, that part of the mandate is taking care of itself. The Fed doesn't really have to worry about that. But at the same time, inflation is coming down. Now, again, I always emphasize that doesn't mean prices are falling. It means prices are rising.
Oh, I got filled.
If you look at the CPI, the PPI, and the PCE, they all pretty much peaked in the middle of last year and have been showing smaller year-over-year increases for 6 straight months. So things are trending in the right direction. And the fact that, again, most of the economic data is coming down a little bit shows that we are heading a certain way. And don't forget, this is a very, very large economy. The only thing that takes immediate impact when the rate hikes start to go up is in the housing market. We've already seen that. The rest of it is just now starting to take effect. The biggest fear out there, I think, for a lot of people is the fact that the Fed might over-tighten and then have to reverse. And in fact, that may be what the market is figuring in. But I kind of believe that, yes, we're going to get a quarter point tomorrow. Yes, we're going to get a quarter point on March 22nd.
Bullish.
And then the Fed's done. It's going to go
sideways
for the remainder of the calendar year unless we see a major change in economic data. And frankly, that's enough.
I don't know much about their financials. I've heard they're maybe going bankrupt. I mean,
this is one of those weird
we're in a
scenarios, again,
Armageddon basically right now with car prices. So there's a housing or a car market crash happening.
Over and we're going higher as a result.
If Carvana's not super well situated for that, they probably will go bankrupt.
A little bit further.
I'm not sure if that was all short and distorted or what.
To kind of pull back, and they can do that relatively quickly, because I think that's what the market's
the chart still looks very bullish.
Inflation's not
there's no divergences here.
Is why not extend? Why not
it's got the momentum. You want to see the volume
tomorrow, and then
I actually did trade this.
Data.
I did trade this, but I actually missed this move.
1 quarter point hike, and I think the market's overlooking the fact that they can
do
that.
It's got a big rounding bottom here.
Well, I think the Fed, I hate to say this, but I think they have to say this because they've been telling
depends on Wednesday, I think.
They were not going to do a proverbial pivot
on Powell,
if
we get just
hiking rates to
full
cutting
on
rates
like
this
rally mode
and I think
again.
Jay Powell
then
wants
yeah, I
to
think this thing
engineer
could
that scenario.
probably
He
keep
does
going.
not want to have to pivot.
Really,
because I think the
that
moment
next
he
main
pivots
resistance is
the
like
moment that he's
1937
admitting that he over-tightened, and he
up
doesn't
here.
want to do that, even though that may
So
very
you got
well
a
be
pretty
the right
big
thing
move
at
up
that
until
time.
there still.
I think instead
You know,
he'd
it's
rather ease
double
in, go
where you're
a
at.
little slower. And again, if perhaps
So,
in March
it
there's
could
the
cool down
need
though
a
for another day or
quarter
two.
point
It's
past
hard to
that,
know.
They can always do
but
that again.
probably.
And it also gives us a lot of time.
I mean, it depends
for
on
more
tomorrow.
data
So
to come in, but I don't
tomorrow the
think
market
he
tanks on
wants
it.
to look like he
This will probably fill this
over-tightened,
gap
doing a
before
pivot where he goes to
before
cutting
and
at
if
some
it makes
point
another
this
move up.
calendar year would do that, and I think he's trying to avoid that. Maybe it's the easier solution, but
Yeah,
you know,
options.
as bad as that sounds, I think
Options
he's
are
trying
still
to save
super
face and
elevated.
not do
So
that.
Yeah,
spreads or shares would probably be what I would do
pile
on
up
it
on
if
the
I was going
mistakes
long.
that they've already made in this, and it's not just him; it's the administration
Alright,
also.
bouncing back up
Thank
here.
you for throwing that in
I'll
on
always
there.
throw that. I'll always throw it.
exactly because this is a much longer discussion on this. But yes, the administration has a role to play in inflation being higher,
And they have had a big role.
Yes.
Yeah, we know that. All right, guys, let's take a quick break here. But when we come back, we're going to discuss AMD, which reports earnings after the close, up about 13% so far this
AMD. So this move up to $2.50, like that's a huge move. So really, I'm flipping these, kind of an arbitrage flip. Yeah, it's almost 1,000%. Whoa, SPY's ripping. What the heck? What is that candle? Hold on, what's going on here? What in the world? I don't know what that is. Dollar's still climbing. That's not from that. Oil's going up. Not sure what that candle is from. Actually, yeah, the dollar's been climbing since 1140. Markets started to sell off, but that move's totally different. Like BBY found a bottom for the day at least. Getting some momentum here. Yeah, I don't know. SPY a new high on the day. No idea what that's from. Yeah, SPY, I don't know what's happening there. SPY is way more frothy than GME. More squeezy, more volatile.
Are very indicative of the future of AMD's business model, I think are very important, especially with the acquisition of Xilinx. But from an EPS standpoint, sequentially, they're expecting flat. Last quarter, 67 cents. They're also expecting 67 cents for this quarter. Slightly lower sales. Last quarter, they reported 5.57 billion. This quarter, expecting 5.52, but that's still higher by about 14% compared to last year for the same quarter at $4.83 billion. Now, the quarter they are also going to be reporting, if you compare it year over year, is going to be down about 27% in earnings. Now, the other thing is important
GME
here,
got
I think,
no
is
move on
the
that.
inflection point, because on a forward basis, it looks like these 2 quarters, including the one they're going to be reporting, are the low points, at least on an estimate standpoint. And even the forward estimates for the next 4 quarters, going back to late September, were $4.88. They've moved down, and this is actually a good thing to see a company already guiding lower in terms of forward estimates. They moved it from $488 a share down to $3.61. So their guidance has already been moved down when it comes down to earnings per share on a forward basis. And I think the complementary aspects of vertically integrated system on a chips and Xilinx may be what's the saving grace for AMD versus an Intel, because we know that at the very least the CPU markets, PC markets are down, server markets and data center markets are down in terms of enterprise spending. But at the same time, I think the industrial end market applications for AMD's chipsets are where the growth really is for the company.
Yeah, and we all know PC demand fell, massively, about 30% in the fourth quarter, according to some data out there. Is data centers the key to this report here, George, for AMD, because they continue to take some market share, even from Intel a little bit, or Intel and NVIDIA a little bit?
Well, very much so. I think what's happening here in the bigger picture framework, Tom, is that we're seeing a duopoly develop between NVIDIA and AMD in the industrial application end markets, the GPU chips, and the system on the chip technologies, which are, again, field programmable. And these are important applications that are very indicative of what's happening in the future in terms of industrial automation. So I think the data center aspects of AMD, that's a revenue driver. It's almost as if they're using the CPU chip revenues as well as data center and server revenues to help fund the capital expenditure for the next generation system on chip technologies, which will be interesting to see, because we know, as you mentioned, as well as from Intel, that the CPU markets are down significantly. So if they guide lower, most likely the stock will fall, but it may be an inflection quarter even for both companies. I think Intel looks interesting right now because of the fact that the earnings estimates were already revised down prior to
I tried to have a short up there too, but it opened and closed.
Down. And on a forward basis, things may finally be looking at an inflection point for these 2 companies.
All right, great backdrop here for us here on AMD. George, appreciate it. That's George Tillis, Senior Markets Correspondent. Yep, thanks, George. Senior Markets Correspondent here on the network. Randy, I'm going to go back to you. Expectation pretty muted for this company. It seems like it's coiling here a little bit ahead of earnings. What's your thoughts here on AMD? And I know you've got an example trade for us.
Yeah, so a couple of things. As we've talked about earlier, we've gone from a very defensive bias to a very cyclical bias, which generally tends to favor tech. This is a stock that's gone down 48% last year, is already up 15% this year. So clearly there is some optimism out there. George made a number of pretty good points about the chip sector and how it maybe has bottomed and there's some potential upside, maybe not in the very near term. But then there's also been a lot of talk, as George, I think, hit it on, that AMD may be slightly better positioned than some of its key competitors here in the near term. So if your thoughts are sort of around those ideas, I put together a trade that has a potential for a near-term pop on earnings that you could benefit from. But then also, we've seen a few of these chip companies that have already announced, companies like Lam Research and KLA and TSM and a few others, where they didn't necessarily get a huge move on earnings, but then over the next few days following earnings, they did start trending
higher. Come on, GME, 1225, time to wake up.
Together and thought if that was your perspective that you might see that on AMD, here's a trade. It's a 3-layer. It's a little complicated, but it's basically got a near-term bias and a longer-term bias at the same time. So we know earnings are coming out tonight. We'll look at the call options that expire at the end of this week, so that's February the 3rd, and buy the $75 call. That's just slightly out of the money, maybe about $1 or so. Since that's a pretty expensive trade, and the point, of course, of buying that one is if we get a pop higher on earnings right off the bat. That may or may not happen, obviously, but that's a pretty expensive trade because of the elevated volatility right now going into earnings. We can then also partly pay for that by going out a couple of months to the regular March expiration, so that's March 17th, and putting on a credit put spread, which also has an upside bias and brings in a credit. That not only helps offset the cost of this near-term call, but it also positions you for if you get
like
a
that
near-term
trade.
dip, you've now got about a month and a half or a month and a half or so for recovery if this upside and cyclical bias that we see in the market continues. So we would sell the $70 put for March 17th and buy the $65 put. If you put all three of these legs together, when I looked at this trade about 20 minutes ago or so, it was at about a $1.10 debit. That's going to be your risk at the very beginning. Now, down the road, you have the potential for if AMD sells off, then you've got that 5-point spread on top of that. So you'd have a max loss risk there of about $6.10 total, but only about a $1.10 here in the near term.
Yeah, let's break this down. It's a customized type of three-way trade. You mentioned the risk reversal aspect of it, where you're buying the near-term Feb 3rd weeklies that expire in 3 days, a 75-strike call, just basically at the money at this point. Then to help finance the purchase of that call, you're selling the March 45 days till expiration, the 70-65 put vertical. You're paying roughly about a $1.10, $1.20 debit for that. That takes your risk. You got to factor in below 65 the short $5 wide put vertical plus the debit that you're spending on it. So about $610, $620 per spread. Kev, break even's about 77.30 the upside on this one, but everything above that is
you gotta go up before Don comes back.
Now
So
your February 75 strike calls go out expire this week also, so you've got to take that into consideration too.
Yeah, you've got a
Well,
month and a half
25.
spread versus a 3-day call.
Yeah.
And so this is one, if you get that upside move, you've financed it nicely and you've got a big, infinite upside exposure. The trade-off that, and there always is some, Tom, you've got negative theta going into this week. That call that you have 3 days is expiring pretty fast.
Yeah.
So you need to have conviction on this upside move, because theta might get you if you don't get that move
Theta might
quickly.
get you.
But you're still,
Get it,
in
get
terms
get.
of upside direction and an out-of-the-money put vertical, you're still doing what we talk about on this show a lot, using the put vertical to finance the long call.
Yeah, I think that's key in this one. There might be some trade management that has to be done before the end of the week based on where the stock goes.
I've got an order ready for a bunch of calls.
Where you might have to adjust or close that portion of the trade or the whole thing based on your ability to do so. But yeah, short-term bullish call financed by a medium-term or so neutral to bullish put vertical on this three-way spread. All right, good example. Look here at AMD into earnings with some upside potential on that example. Thanks to Randy Frederick for joining us. Appreciate it very much. But coming up after the break, Like Bolio is going to join us with some data on Match.
Okay, this is how it started before too. Is that VWAP running 5 minutes late? I got filled on my birds calls. I put it in Discord. 2.5 strike calls for July. $1,000 or 1,000% out of the money. It's a bit of an arbitrage play though. I get them for a minimum of 5 cents, and these same contracts I will show you. Excuse me. These contracts have has been the pricing on these contracts. So 5 cents is the cheapest they've ever been. Over here they were 20 cents. That's the highest they've been. 10 cents, 15 cents, 20 cents. So we'll see. Not to say I could get all of them sold at 20 cents, but I could probably get them all sold at 10 cents before expiration, I would hope. And if Birds calls for a reverse split or anything like that, might cause a big rally. And then another rally potential just from regaining compliance with NASDAQ, it looks like, from what this one's getting its move from, MSGM, as well as MGAM. These are both in the gaming space, whereas Birds is in like transportation, but yeah, just looking at another stock that's been completely squashed by shorts and having longer dated options for some exposure. So I got let's see, got a lot of them, but they're cheap, 5 cents. Got 113 of the April 2.5s, which I have an order to sell those. I had it for 10 cents because I got them for 5. I've been sitting on those for a couple weeks though, probably more like a month or two, and they haven't closed. So I dropped it down to 5, just get my cost back in it because I basically moved up to July now. Gave myself 3 more months, and same strike, and that's the same 5 cents debit. So might as well close these for that and keep moving it forward, keep getting that exposure to the upside. So yeah, I got 80 of the July 2.5s. I might get more if my April calls close. If I get those sold, then I could get more of the Julys.
So they've got 3 of the top 5. They've got the #1 spot. But what's, it's kind of interesting to look at the just overall picture because dating app usage is down.
I know. I haven't really followed their track record
when it comes to our statistics. It is up on a 2-year basis, and it's
yeah. I mean, I like their TA and stuff for the most part.
You can actually see
legit.
That, when you look at the company's overall.
Their option trades are so complex, but
the monstrous effect
nice
that COVID had. I mean, everybody decided,
they're cap gains. They're not
swiping or liking or whatever it is that you
do.
they're
not susceptible to too much data decay like a long call or long put would be.
They're
way out the money, short date. They're pretty risk averse.
When you look at across
options.
the board, which of their brands are doing well. Match.com, the keynote one there, the namesake brand is actually got the highest level of happiness, and it's the only one that's actually seeing purchase intent increase on a year-over-year basis.
30 seconds.
You can see the other ones, happiness-wise, Tinder's at the very bottom, sort of a meat market, where I think Match is designed to actually make connections.
Okay.
But all of these have losing purchase intent except Match.com. And actually, Hinge is probably the one that is looking to be potentially the bright star over time. This is a chart of just Hinge here. You can see how well it's done over the last 5 years since it started. It's really, coming on. It's down a little bit on a year-over-year basis, but it has grown quite a bit over the last 3 or 4 years. Whereas if I don't have these charts for you, but if you pull up Match.com's or Tinder's, the usage is actually declining for those as far as our data shows. So a little bit of concern there. I think they've got a huge portfolio of brands that they can draw from. But the question is, which one or ones are going to take them into the profit land and doing really well. So the main problem I think is though that they've got Bumble to compete with, right? And when we look at Match as a group of companies versus Bumble, which is just one app. Bumble's second right now on the most downloaded, but their users are happier. Purchase intent is higher. They're, when you compare the two, they're the smaller dot because they just have less users. Match has that portfolio of apps and websites, but Bumble is up and to the right versus Match. So comparatively speaking, if I had to invest in one of these, it would definitely be Bumble. So Match right now, I think, is struggling with just they've got this whole host of websites, but none of them are really killing it. I think Hinge is probably, I would say, the potential future for this website. But Tinder's going to be crank it out, obviously, but you can see here, and what I'm talking about, the
base is top 5.
Green line is the purchase intent. In other words, download or new users signing up for all of the brands.
I was like, wants to break out. I think SPY could make another leg higher.
Look at it. I mean, it looks similar to people working out at home or working
another
from
move
home.
up. Probably this range right here, 403.93,
right when COVID
maybe
hit.
404.
But then ever since then, there was just
kind
no
this,
stickiness, and it has fallen off. And now
right here,
we're actually below levels at the far
potentially
left
back to the high of there.
January of 2018 is higher than we are in January of 23. So they're down on
it's hitting resistance
basis,
from
even
back
though
here.
they've got all
This
these
low.
new properties, new things getting
right
people
at that
going.
spot.
I think Hinge is the one that's really doing well over the last 3 years.
Breaks
Match,
that,
Plenty
yeah.
Fish, Tinder, they're all sort of down and to the right. So
I don't think
I'm
it'll
sure
go
that they're
crazy
trying to
like filling
figure
this
out
gap
which,
today, though.
which brand to put
It
their
needs,
money into.
oh, there's a pretty big move.
Because
Needs PAL and
it's
that kind of
great
thing.
to have this diversity of portfolio companies or
I could be
portfolio
wrong.
brands, but you got to make
It's
a
up
lot of
0.8%.
decisions then when you're
Not
really
bad.
not
I mean,
sure which one to go with. Whereas a company like Bumble, they just make their product better. So I
yeah.
don't envy them as far as the
Huge move
executive
up
team over at Match.
from
And right
its
now, I'd say that long
pre-market
term, I'm
lows.
not super bullish because some of the trends should be helping them. Again, dating app usage up 70% year over 3 years, and it's down on a 5-year basis for Match. So I just don't like the way that they're executing right now. It doesn't look great for the long term. For the short term, leaning bearish.
Landon, 25% of all engaged couples met on some type of online platform.
Wow.
So that
25%,
number
that's crazy.
That's a good solid number for what these companies do. But Landon, all you have to do is look at how many of these are, and competition has to be a problem. But it's more than that. If you look at their revenue
MSGM,
over this year,
it's already pretty high here. It looks like
revenue,
making another
quarter
move
one,
higher.
18%. Quarter two, 13%. Quarter three, 6%. So there's
Right at
the
that
same
resistance
old
from
story,
back here. Look at that.
decelerating revenue. And I think, Landon, this is
What in
our
the world
first
is up
look
with
at
this chart,
digital
man?
ad spend, because they sell advertising space. They need revenue from digital
Oh,
ad
that's 'cause of
spend
reverse
as well
split.
as subscribers.
Thing got
so
wrecked.
this is a multifaceted weakness going on here, and this might be, Tom, our first look at weakness in digital ad spend and how it affects these stocks, Landon.
No, I think that's a great point. And if I'm not mistaken, Bumble reported last week, and they had good numbers, plus 70% revenue, plus 15% paying users. But you're right. I think that this is a good eye into that. I think we've got Snapchat. What is that tonight? Snapchat's
yes.
tonight. So that that'll be another look into that. So we're going to get a good picture on ad spend tonight or tomorrow morning over the course of these companies reporting. And again, I think that it's just coming down to the space is accelerating, and they own the most the most stores out there, if you want to call them that, but they don't seem to be performing as well as some of their more concentrated or focused competition like Bumble.
Yeah, Bumble probably focused more. By the way, this ring on my finger result. That's a result 8 years ago on one of those platforms. But Landon,
Nice.
what kind of earnings score do you have for Match going into these results?
Right, so we're only at -10. I was kind of hoping we'd be a little bit stronger as far as the bearish lean, because long term I have this bearish lean on this company based on all of our data. And you could make an argument that the run up from 38 to 54 in the stock kind of sets up a little bit more of a bearish trade. So gun to my head, I'm definitely going
New
bearish
high
on this
there.
one, but officially we're just leaning bearish. If any kind of weak numbers come out and it pops for whatever reason, maybe the Fed helps them or something like that, I would be more inclined to go short. But right now, I'm not bullish on this company long term, especially with the run up in stock price.
Yeah, and I think a lot of focus will be on the advertising dollars for this company. All right, great stuff as always, Landon. Appreciate it.
All right, thank you guys. Take care.
All right, that's Landon Swan, co-founder of Likefolio, breaking down the data for us here on Match.com. Kevin, I don't think we've done this topic with Likefolio for a couple years now.
Right, I think we did it, but it's been a while. Yeah.
It has been a while, and you see that downtrend in the stock, but now you see the nearly 30% gain so far in January. Now, a lot of beaten down stocks have rallied pretty significantly.
With the whole market, right?
Yeah, but the option market's, it's what, $4.50 either way, basically, for a move in the share. So implied
452 as of showtime.
Oh.
Yeah, so implied volatility elevated in the near-term
Zoe
options. How do you want to look
reported
at this from an
purchase of
example?
338,000 shares.
Expiration volatility.
From 95, maybe that was part of the catalyst.
I keep wanting to say
front cycle.
Yeah, exactly.
SPY's moving up, new highs.
Implied vol in the
This dude just made a killing on his
the next
purchase.
one, February 10th, 83 vol. So a good
wow.
A good amount of divergence between those two times. So what I did, I used that and the expected move right now that I said like $4.50, Tom. 4.5 times 2, about $9, and there it is. Do the 1 week calendar spreads in either direction. Why? Because I don't know which direction.
388. I actually might add to my short
50,
up here.
per calendar, and the 59 call calendar. $4.50. Move on either side, $9 wide on my calendars, Tom. And if you get that expected move, you've got theta. But what might be the most attractive part doesn't mean you're going to be profitable, but very low entrance on these one.
I don't want to average into it too much because then
right now trading just
my
around
stop will have to be
61 cents for
too
both
close
of
to
them
the money.
combined.
Yeah,
I'll give myself some
and
headroom.
Here we've got the risk profile up. We used 70-cent debit, which is right around where it's currently trading right now. Let's break this down. Double calendar position, buying the February 10th weekly series, the 59 call, 50 put, then selling the near term February 3rd weekly options, 59 call.
Yeah, share this on our
put,
Discord.
And roughly about a 60 to 70 cent debit. There's your risk. What you pay on it, you want the stock to move that either towards that 50 strike or up to that 59 strike. But your break-evens, Kev, about 47 on the downside and about 64 potentially on the upside on these double calendars. So you need a move in the shares. We mentioned the run-up. Now, this would take advantage
still
of
moving up,
like
403.82,
data also to the downside if
0.8%.
it does start to grind lower
GME
towards that
just
50
flat
strike.
on
So you got to
BBBY.
keep that in mind. But Kev, when you look at this, where you're paying a 70-cent debit, you're taking advantage of positive time decay and that higher implied volatility in the options that you're selling. But after earnings, the volatility is going to come down in the options that you're long also. So when you look at this and you say, oh, this thing can more than double, perhaps triple to maybe $2.10, but you're probably not going to get $2.10, right?
You have long Vega on this trade, and that 83 implied vol, that's going to come down as well. Look at a couple weeks out, it's in the 60s. So both of those are going to come down. One, obviously, the front month where you're selling these calls, you're selling the 50 put at about almost 90 cents. You're selling the 59 call at almost 80 cents. So you've got a lot of premium coming out of that front expiration, but it's also going to come out of the back. You're hoping that
these are good plays around earnings, really.
Some edge there.
Sell the premium for the earnings and then have a calendar in there
one of the strikes in
that's
direction.
not
One's going to be wrong,
pumped up
probably,
premiums as
but
much
maybe you get
for a later date.
enough right to make up for both of them. You see the profit graph, but like I said on Monday, I think when we talked about this, be patient with these calendar spreads. Let them work if you get the move you're looking for.
Yeah, and time decay or positive time decay helps offset that fall in the implied volatility in the options that you bought.
The divergence in the implied volatilities make the price cheaper. That's the edge, if there is any on this trade.
Hi, man.
Right. And I always look at those if it expands to over $1, over $1.50 is what you basically want on something.
Broke that resistance back there.
Trade, but it might be a good single
move
double
up.
that you can do on a consistent basis.
Yep. Yeah, definitely need to move towards either one of those strikes, but you got a nice wide range in that example trade. All right.
I mean,
coming up
really,
after
yesterday's
the break,
high.
We're going to take a look at Western Digital, which has rallied
quite a
nearly
ways, but
40%
seems like
so
we might
far
be able
this
to make
month,
it.
and reports earnings after the close. We're coming right
It's only
back.
12:45. Yeah, the put to call ratio on GME right now is insane, actually. Shared this on our Discord. GME's now running into heavy call territory with put to call ratio down to 0.56% for new 2-year low. It's a low because it's put to call, so how many puts compared to calls? So way more calls than puts. Yeah, so I think this gray line is like the equilibrium, where it's even put to call ratio. This post down here said a ratio greater than 0.7 or exceeding 1 means that equity traders are buying more puts than calls. He was saying 0.7 is about average. So typically you have more calls than puts. I'm not sure where he's getting that from or if I agree with it, but yeah, basically 0.7 is average. So more calls than puts. But GME's at 0.56 right now. Those blue lines tracking the put to call ratio. So you saw as the price came down here, as the price is coming down, more, puts were getting sold off or closed and calls were getting opened all the way to here. And then here's where we bottomed and we started rallying. But not a whole lot. I mean, look, even here we're still off to that huge move. And I don't, oh, what happened here? That was a split. Okay, that makes more sense. This is messed up because of the split. But yeah, it doesn't necessarily mean we're going to have a huge run, but it's an interesting metric to look at. SPY continuing to melt up here. I think yesterday's high is on the table. 404, 95. Crazy. And GME is getting none of it. MSGM consolidating nicely up there. Same with MGAM. And AI. I never got an email back from Bird's Investor Relations. Not cool.
Dollar near 7-month lows, under 102, back above those levels now. Is this what equity markets are keying in on, that we're going to continue to see that downtrend that started at the end of September?
Yeah, I mean, it has lost some momentum.
Dollar's
right?
rallying, dude. We're going up.
Out last year around 115. You can see the run-up that we saw from 94 and how we kind of worked our way back into the middle of the range
Oil's coming down.
This year. Hanging out right around 102 as we speak, down fractionally on the day, but a little bit more sideways as of recent than not. And I think this is a pretty good reflection of what we've seen in terms of rates.
Used it for cage liner?
Also, you know, a pretty good indication of how market participants are just sort of in a bit of a holding pattern. They're waiting to get some more information.
Dang, come on, man.
From the jobs
Bird's gonna have its moves. It's gonna look just like MSGM.
Directly tomorrow.
Maybe not just like this, but I could see this in Bird's future.
In addition
this right here.
The Eurozone
500%.
decision. So there's a lot for investors to focus on here in addition to.
Especially if they have a catalyst like reverse split.
Momentum to the downside from 4th.
Nasdaq compliance.
Around 3.5 right now. TNX taking out the December lows. 30 are not participating, and I think the dollar reflection of it's, again, just kind of losing momentum to the downside.
Yeah, we also watching that oil market as energy names have reversed as crude oil's up about $2.50 off its session lows for the day. All right, thanks to Ben Lichtenstein, host of the Future Show here on the network, helping us break down some of the asset classes and the risk on trade that we're seeing. Kev, let's get into a discussion. Western Digital.
This is a tricky one.
This is a tricky one because you know that discussion that we had about AMD and the diversification that they have across different revenue silos, right? Western Digital's in memory, right?
It's hard drives.
Yeah, hard drives.
You would think that most of the world has moved away from hard drives, but if you read and do a little research, you find out that the cloud companies still use hard drives.
Right.
So there is still demand.
What else would they use? Solid state?
You read about it, you're like, wait, they're still in the hard drive business? How do they do that? But there's demand. Amazon, they don't say it outwardly, but the rumor is that Amazon uses hard drive, these hard drives. It's all, I guess, how long you have to store it
much
and
cheaper.
how much access you need to it. It's
another data
it's kind
storage.
of confusing to read, I'll be perfectly honest, but all we know is this. They're expected
all right, SPY's coming down now.
Make 7 cents, and this stock has run a long way in the last few weeks, and it's teetering around overbought.
I can see a little GME inverse here. That'd be sick.
Down slightly.
Yeah.
It's sitting right around about a 70 on the RSI.
Yes.
So it was higher,
Do it.
overbought. Now it's teetering right there going into earnings.
Yeah, a little bit of weakness today, down 1.7%, but still up 38% on the year.
They warned in October, remember, that's why you saw some sell-off back then.
50% of their revenue comes from cloud, but it dropped 18%.
Right.
What's in those clouds?
Because
last quarter.
Spinning hard drives.
That's why. So they've suffered because their hard drive services the cloud. So that's how they've actually suffered, because this cloud weakness that we've reported on all along in the last
Birds
several
is
months.
So
BRDS.
we'll get an example trade here. I went with
Got a great ticker.
something, directionally biased.
It is now
so
a penny stock.
Typically,
Worth
in
23 cents.
volatility really elevated in
So it's
here,
part of
maybe
the
you like to
de-SPAC
sell
curse,
out of the money put
or SPAC
verticals.
curse
If
that
you're a
may
little bit more bullish on a
that went
name, or out
public,
of the money call verticals if you're a little
suffered
bit more
from
bearish. But I looked
in
at something
2021.
directionally where
crazy, that was
it's
2021.
an earnings play, right? But you've still got a couple weeks in it. I looked
many
at buying
SPACs
a
you'll
put
see
vertical
have a
in
similar
here, Kev,
chart.
just due to that run up. If you had that,
I mean, the RSI doesn't lie. That doesn't mean it's automatically going to go down, because they can be frustrating, but this stock is overbought.
yeah, up on a technical basis, correct. So I looked at. We all know that it can stay elevated longer than what you think, but looked at buying out in the February monthly cycle, so 17 days till expiration. Buying the 44 strike put, which is currently in the money. It's got that higher negative delta. Buying the 44 put, selling the 40 put, $4 wide put vertical to the downside. You're paying roughly about $1.60, $1.50 debit on that. That's going to be risk, whatever you pay for that. But if you pay $1.60, your break even, $42.40 to the downside. Now, you're paying $1.60, it's $4 wide, right? You've got $2.40 that you can potentially make if the stock goes below 40. And Kevin, the anticipated market maker move about 275
that volume,
either way
last 5 minutes on GME.
Yeah, this is just a very fundamental long put vertical. An in the money put, selling an out of the money put. You're looking for a downside move on a stock that we all have stories about using relative strength, and it can be very frustrating because it could sit up there for a while.
Yeah.
That's just one tool that you can use as an indicator. It's not a Bible, but if you think that the stock is run and may disappoint or whatever, this is a trade that can make you, with $1.50 debit, $1.60 debit right around there, can make you about $2.40, $2.50.
Right, and there was some data out of Trend Focus, paints a dismal picture of the hard drive market. 40% fewer hard drives shipped in 2022 versus 2021. That's right in the wheelhouse of Western Digital. But this is just an example. If you're a little bit more bearish, you think this stock's run up too far too fast for the month of January, this would take advantage of a down move, and you want it to go towards that 40 level at this point, a low-cost entry point on that. Also, Kev, real quick here, ahead of the Fed tomorrow, markets real quick here. I mean, we're rallying. It's near session highs. The optimism's there.
Surprising strength. But remember, thin markets and whippy markets can go in either direction, then go up or down. I think the lower U.S. dollar that you mentioned is affecting lower yields as well, kind of favoring stocks, but not a lot of conviction here.
Yep, and that turnaround in energy names also probably helping. All right, that's going to do it for us today here on Fast Market. Stick around, though, right here on the TD Ameritrade Network.
What was BuzzFeed's catalyst? I can't remember. Oh, the deal with Meta. Chat GPT owner. By another red candle. GME coming up to 1 o'clock. The biggest risk to the market is no recession at all, JP Morgan says. Haven't heard that take before. That's deep. Alright, SPY gonna reject this. Nat gas bouncing off that low. Just trading back and forth in that range. Same thing it did yesterday.
I'm Jenny Horn alongside Alex Coffey. And Alex, to kick off this show, we are seeing a nice recovery in the overall market today. Today also does mark the beginning of the Fed meeting, and I would say earnings really ramped up today. A lot to get through.
Tons to get through, but still tons to unpack as this week's rolling on. This is almost a calm before the storm, as crazy as that is to say. Up 30 in the S&P is certainly a nice bounce back after yesterday's weakness. But the question we're all asking is, where will we be Friday afternoon after we get through what is literally the longest list of things to get through that markets have ever seen?
I know. I also feel like even tomorrow, I'm anticipating just the moves Thursday and Friday more particularly. Just tomorrow, it feels like we are also still in this holding period, but still a ton of earnings reactions to get through today. We will kick things off with a lot of those earnings movers with our upvote and downvote segment. Then we will chart and trade two names as always. Our FOMO discussion is naturally all things AMD ahead of their fourth quarter report today after the close. Then we'll look at a slew of streaming names, Disney, Warner Brothers, Paramount, after Macquarie updated its coverage on the stocks. Last but not least, we will look at C3 AI surging on the day after announcing new AI product suite that is set to launch in March. Interesting story and an interesting move that we'll discuss with George coming up later on.
Yeah, I love that they got the lockdown on the AI stock ticker as well, so that'll be a fun conversation with George. I love kind of getting into those names that are maybe less talked about with George. He gives us a nice kind of overview of the financial picture as well as a little bit about what each one of those companies is specifically working on, so that'll always be fun for under 30. Looking forward to the AMD conversation naturally as well, Jenny, as that's going to kind of dominate. Is almost an appetizer once again. We'll get Meta and AMD before we get the big three, as I like to call them, later on this week, as well as the Fed, of course, and jobs. Talking some streamers, that'll be fun, but upvote, downvote, let's start here. Not endorsements, not recommendations. We talked this a little bit yesterday from a preview standpoint with Caroline in GM. There was an analyst update where it sort of flip-flopped Tesla and GM, but now we've heard the results, and it seems by looking at the stock's reaction, up 8% here in real time, it couldn't have been that bad.
Right, it does seem like the car business is faring perhaps better than those had feared, as we saw year-end results from GM be better than expected, plus its guidance for 2023 topped estimates. They did report earnings of $2.12 a share on sales of roughly $43 billion. The company did say they are looking to take $2 billion in cost-cutting measures over the coming year to help them meet some of their longer-term 2023 goals, but they are not planning any layoffs to achieve that goal. No layoffs is obviously good news for investors as well as employees. It does make sense, though, considering automotive production has been constrained for some time due to major supply chain snags. GM did sell about 2.7 million vehicles in North America in 2022, but I think this really speaks to the fact that supply chain is still an issue for the company, because you compare 2.7 million to the 3.2 million they sold in 2019 in pre-pandemic times. Guidance still, though, looked very solid given a difficult operating environment that has included interest rates, falling vehicle prices, and more sales of EVs. But to speak to their EV segment, along with their earnings, they did announce they're investing $650 million in Lithium Americas to secure raw materials for their electric vehicle ambitions. They do want to be selling about 1 million EVs in North America by 2025, and said the lithium extracted from Lithium Americas operations would be enough for the batteries for those 1 million vehicles. So definitely making moves to progress their EV business, which is something the street pretty consistently likes. And obviously, Alex, seeing a nice pop in reaction to these results today.
Yeah, the results are pretty huge. I mean, you look at the margin of the beats by almost a 25% over expectation EPS beat, 5% over expectation or so or thereabouts on the revenue front. I mean, this is a company that is kind of in this legacy bucket where you're not really seeing investment into these names oftentimes because of growth. But the EV transition has really ramped up the growth prospects for many of these companies, including a GM. Really impressive report here, despite all of the macro headwinds that you talked about. Going to say upvote, we don't oftentimes talk about names and then look at the charts and trade them after the earnings report, but this one really is jumping off the page. For that reason, I think it's quite interesting. We'll say upvote.
Yeah, and I feel like we focus so much on the EVs that these legacy auto players have to get some love. And our next name today, Victoria's Secret, also making a nice move higher, up about 7.75% after raising its fourth quarter sales and profit guidance to reflect a successful holiday season. They now expect their earnings to range from $2.25 to $2.35 a share, compared with their previous guide to $2.05 to $2.25 a share. They do expect sales to still fall between 7% and 8%. Although this was better than their previous expectations for a high single-digit decline. And the CEO said their sales performance outperformed even their own expectations, with margins falling very solidly in line despite a heavily promotional environment over the holiday season. They did also announce plans for a $125 million accelerated share buyback program with Goldman Sachs. So another name that is seeing a nice move higher today, fueling its 17% gain so far this year.
Yeah, this is another example of, fundamental update here. In a way, when I see these guidance updates, this is sort of an early release of earnings. They're basically telling you how that quarter shaped up, giving you a really narrow range, and then the street has to adjust to that. So oftentimes this will take the sting out of that earnings announcement when we get it down the road. However, in this particular case, I think this might be a little bit more of a focus on that accelerated share buyback as well. More potential returns given back to current shareholders. So again, a repricing there, but a step in the right direction. Still losing, expecting to lose, but working its way back towards that zero line. Going to say downvote, though, for Victoria's Secret. Sure, we'll come back to this one in future times, but for today's show, we'll say downvote.
And I do always feel like this is the better way to present the fact that you are still anticipating your sales to fall as much as 8% by just the fact that it's better than what they had previously guided for. So still a sales loss they expect, but again, better than what they had previously anticipated, which the street is liking today. Our next name today, though, Polte Group. Polte Group is making the most notable move higher of the bunch, up 9.5% in reaction to its quarterly update. They reported fourth quarter total revenue growth of just shy of 19%. 1% year over year. This also pretty handily beat expectations. Adjusted earnings came in around $3.63 a share, which also did beat consensus around $2.90 a share. Their home sale revenue was of $5 billion, was higher by about 20% on a year-over-year basis. We also saw home sales increase by 17%, which was led by the fact that the average home selling price was around $570,000, and as well as a 3% increase in their closings. Home building gross margins did expand by 200 basis points to 29%, and the adjusted operating margin expanded by 250 basis points. Their net new orders did fall, however, 41% year over year, as higher mortgage rates, reduced affordability, and lower consumer confidence did weigh on their demand. So wasn't necessarily all positive from the company, but the CEO did say that while demographics, supply dynamics, and the overall financial benefits of home ownership keep them confident in the long term, the Fed's actions to fight inflation through higher interest rates continue to impact home buyers. So nothing we haven't heard before really from this company, but the fact that they are still seeing pretty solid double-digit growth throughout a ton of their metrics was obviously received well today, Alex.
No doubt about it. Really impressive quarter, but again, a lot of the negatives you talked about, like the lower orders, all that's an understood story. So when you look at this, it's hard not to, see this if you're an investor in this company or in this space and say anything other than, expressing excitement. This is a pretty impressive quarter, beat by a huge margin once again. So both GM and Pulte, huge beats. In this case, the revenue beat is almost a 10% over the expectation. That's huge. And so while it could be an upvote, we got to save the final upvote for the last name. I'm going to say downvote for Pulte as Peloton has stolen the spotlight here as it's a pre-earnings look, Jenny.
Peloton, which is crazy to me that it's the smallest gainer of the day, up 3.5%. But
That's
to
true.
Peloton's credit, they
Peloton's a
have
runner.
risen the
That's
most
all that thing.
significantly on a percentage basis this year, up a whopping 60% over the last month, and also now up 91% from their lows, but nowhere near where we once were, still about 68% from yearly highs. But since mid-November, Peloton has held 3 major promotional events, those being Cyber Week, their holiday sales, and their post-holiday discounting.
Okay, see if SPY breaks the support here.
Could help spark
GME is ready to go.
down demand in the company. However, they are expected to post another sharp slowdown in revenue growth, which would then fuel the bears' concerns over their long-term growth prospects. They've missed their bottom line estimates for 6 quarters in a row, which is pretty brutal, while trailing revenue expectations has missed 5 times in that same period. The company has notoriously been pretty heavily reducing the prices for their equipment and has also been experimenting with subscription plans for its equipment rather than just upfront buying. Cash flow positivity remains, I'd say, a debate among the analysts. I saw one analyst call for cash flow positivity by the 4th quarter, so that would be in the spring of this year. Seems a little ambitious as inventory constraints do still remain a
still quite a bit of time left
still,
still, but
company, but all in all, it has had a nice year thus far. I just think it's all relative when you compare where we once were versus where we have been now for several months. We've sort of just been stuck in this range for Peloton, but earnings tomorrow, of course, before the market opens.
Yeah, this is one of those ones, Jenny. I was just kind of looking at some of the options that are listed. If you go out to January of 24, they have some of those old strikes that would have been available at different prices, going up to like $200. I mean, you're talking about fractions of a fraction of a percent chance that those are prices that would ever be even touched over the next year when you look at some of the, sort of the probabilities. So when you're taking into consideration Peloton, it's more about looking forward now and setting reasonable expectations. There's going to be a lot of hype around this one, around its earnings, as it's continuing to try to find its way after its very, very public struggles and its collapse from the 170 mark or so in terms of stock price, Jenny. But it's a pre-earnings look, so it's always fun to talk this one. There'll be a ton of volatility priced into these options, as the news could be perceived as very, very strong, continue its ascent, or it
it could be a step backwards once again, and you can see, it kind of smacked back down. But nonetheless, when we look at this one, it's a reasonably lower price per share stock, so accessibility may come into play a little bit more for many. The strategies may open up a little bit, and it's a brand that I feel like many are very familiar with, maybe even fans of. So anytime we can talk about names that people have interest in, I always think that's great.
I know, I do feel like those that love Peloton truly love Peloton. Rarely do I hear someone that has the bike or the treadmill and they're like, it's average. That is so not the sentiment of those that truly love Peloton. So we'll dive into the charts, look at some examples.
GME just needed a little push on the SPY to the downside. It's like, okay, I'll take it. Let's go.
Next Gen Investing, we'll be right back.
And SPY is now going back up. Got a little video on put to call parity.
Individuals trading options should familiarize themselves with a common options principle known as put-call parity. Put-call parity defines the relationship between calls, puts, and the underlying futures contract. This principle requires that the puts and calls are the same strike, same expiration, and have the same underlying futures contract. The put-call relationship is highly correlated that if put-call parity is violated, an arbitrage opportunity exists. Let's break this down. The formula for put-call parity is C plus K equals F plus
GME dumping
P, meaning the call price plus the strike price of both options is equal to the futures price plus the put price. Using algebraic manipulation.
What's going on here? Picked up some volume there. AMC's outpacing to the upside now. Huh.
This formula can be rewritten as futures price minus call price plus put price minus strike price is equal to 0. If this is not the case, an arbitrage opportunity exists. For example, the futures price is 100 minus the call price of 5 plus the put price of 10 minus the 105 strike equals 0. Let's say the futures increase to 103 and the call goes up to 6. The put price must go down to 8. Now let's say the future increases to 105 and the call price increases to 7. The put price must go down to 7. As we originally said, if futures are at 100, the call price is 5 and the put price is 10. If the futures fall to 97.5, the call price is 3.5. The put price goes to 11. If a put or call does not adjust in accordance with the other variables in the put-call parity formula, an arbitrage opportunity exists. Consider a 105 call priced at 2. The underlying future is 100. Can anyone guess what the put price would be? The put price should be 7. If you could sell the put at 8 and simultaneously buy the call for 2, along with selling the future at 100, you could benefit from the lack of parity between the put, call, and future.
Interesting. I want to see that chart again. Yeah, don't know, that little volatility drop on GME.
Along with selling the future at 100, you could benefit from the lack of parity between the put, call, and future. Let's look at different market outcomes demonstrating that this position allows us to profit by arbitrage regardless where the underlying market finishes. First scenario, the futures price finished below 105 at expiration. Our short 105 put is now in the money and will be exercised, which means we are obligated to buy a futures contract at 105 from the put owner. When this trade was executed, we shorted a futures contract at 100. Therefore, our futures loss is $5. Given the fact that we bought at 105 and sold at 100, this loss is mitigated by the $8 we received upon the sale of the put. The put owner forfeits the $8 when he exercised his option. Our long 105 call expires worthless, so we forfeit the $2 call premium. This brings our net profit to $1, with a loss of $5 from the futures and a loss of $2 from the call and the gain of $8 from the put. Next scenario, the futures price finished above 105 at expiration. Our long 105 call is now in the money, allowing us to exercise the call and buy a futures contract at 105. Because we exercised the option, our $2 premium is forfeited. When this trade was executed, we shorted a future at 100. Therefore, our futures loss is $5. The $8 we received from the sale of the put is now profit because it expired worthless. If you add up the $8 gain from the put, less the $5 loss from the futures, and $2 loss from the call, you would net a profit of $1. If the futures end exactly at 105, both options expire worthless. We lose $5 on the futures and make net $6 in option premium. Therefore, we net $1. We stated earlier that put-call parity would require the put to be priced at 7. We have now seen that a put price of 8 created an arbitrage opportunity that generated a profit of $1 regardless of the market outcome. Put-call parity keeps the prices of calls, puts, and futures consistent with one another, thus improving market efficiency for trading participants.
Hey, you guys get it? I might have to watch that a couple times. Yeah, I don't know why GME dumped right there. It was weird. All on its own. Nat gas back at the highs today. Might take a short up here.
Up because oftentimes it feel like we have a bit of a divergence between different indicators, which is obviously more difficult to pinpoint than price going forward. But thankfully, we do have things for once matching up. We also have this earnings event behind us. So now trading this name, Alex, things from a technical front looking very optimistic. Today's price action looking very optimistic. So walk us through an example trade then that leans more bullish.
More of an old school name, oftentimes doesn't have these kind of moves on a regular basis. You talked about the earnings being in the rear view mirror, but it was a positive message sent to the street in that announcement, leading to this upside move. Rick highlighted many of the reasons that optimism is brewing on the technical front. He talked about that, 39.5, 40 levels, a potential area where we have maybe run into a little bit of resistance. And so with that being said, I looked at something that would look for a continuation of this move to the upside.
Recovered calls are up
over the
64%.
next month and a half
Jerk.
or so,
Got
going
shaken
after the
out.
March expiration, buying and
Well done.
kind of traditional call vertical here, $5 wide in the strike selection.
Yeah, you must have got a nice
37.42 in the March monthlies. $2.50 debit.
Just got a nice fill on those. Nice entry.
We talk about fairly regularly. That would lead for our directional speculation to have equal risk to reward in terms of that ratio. $250 in risk to $250 in possible reward, not accounting for transaction fees. And then 39.5 would be that break even, corresponding to some of those moving averages that Rick had talked about, as well as pretty near that $40 resistance point. The reason 42 is the point in which I selected to the upside. If you look at where that most recent set of rallies ultimately stalled out, it was quite close to that 42 level. So over the next month and a half, if this optimism can continue to brew, at the very least, maybe looking for a move back to those former price levels. And in the event that it does stall or fall there, that's still the max profit zone.
Yeah, I think that's really well put. Now to shift gears here, we will look at Peloton. Peloton shares are up 3.5% today ahead of their earnings event, which is tomorrow before the open. And I was actually just looking at the max time frame on the Thinkorswim platform.
Nice, well played.
This name
You're going to close them out today?
is $171 a share. So pretty brutal when you consider now we're just shy of about $13 here, Rick. But I have long been advocating for the fact that we've seen a reset in the valuations of a lot of these names. You almost can't even look at these longer term charts. You have to assess things for what they are and, obviously evaluate its recent price levels. But this name, I do admittedly very closely watch. It has been absolutely so stuck. I feel like we've been in such a tight range as of late. So waiting for any sort of movement, whether it's upside to the downside on this earnings event.
Yeah, I agree that it feels that way, but actually we're up 94% off those yearly intraday lows near 666. So that's kind of an interesting tidbit to consider. Despite the devastation we've seen in this stock, it's up significantly off its lows for this year. And the 1350 level, where we topped out, near where we topped out yesterday, looked significant to me. It's where price peaked here, here, and here. So we've got a bit of a triple top to contend with here around that 1350 level. I'll make a note of that. 1350. And we can see that the moving averages that we follow, price rose above the two shorter-term ones.
When are you going to close them?
63-day EMAs, and the next spot to
Does
the
Norwegian
downside
oil
would
fund
be
buy a
that
bunch of?
20
I don't know. I haven't been on
near
Superstock
about
enough to know what you've been talking
11.17
about.
there. So that could be a point of support to keep an eye on.
Sounds pretty funny,
as we come
though.
up to this resistance once again, it's worth
I have
noting, I
tried
think,
to find
that
the correlation with
RSI
nat
is
gas and
trending
GME.
downward a little bit there. It's diverging bearishly, meaning that price is making new relative highs, but the momentum is not. The momentum is actually waning a little bit. but we're heading into earnings. That's going to potentially change everything anyway. So what we really would be interested to see, if you're bullish in this name, would be a good earnings that could take us above that triple top, give us some energy in the breakout. When you have these levels of support and resistance that are long term, that they've been tested multiple times, they tend to be more significant. You tend to get a larger eventual breakout if the breakout does start to happen, because there's all kinds of stop orders around that point. A lot of things can get triggered at once. So if we do get some kind of big move upward, the 16 level stood out because that was the highs beyond that point from right there. That could be another point of potential resistance to keep an eye on, 16. Those two levels, 1350 and 16, are upside points that you want to keep your eye on.
Yeah, and Rick, I'm probably being too greedy here as I say they've been stuck in a range, but to your point, they've rallied over 90% from their low and also are up 60% over the last month.
That's a pretty big move.
You know, this name, I just was accustomed to a higher price tag, but better to be trading around $13 than below $7 a share where we once saw. So I guess it's all relative, but we'll leave it there. Appreciate all of your technical insight, Rick Ducat, our chart master. So now, Alex, when trading this name, we were discussing how the options market is pricing in a pretty massive move. I mean, around $2.40, which is massive for a $13 stock all in all. So considering the volatility that the street is expecting in this name, walk us through a trade that then leans more neutral to bullish.
Yeah, first thing I'd say is
what's your take on this?
Right? If I'm a shareholder with the price level at 150, 13 is pennies on the dollar, right? But if I looked at this name when it was $7 or $8 and it's at 13, you know, I'm joyous over the nice rally. So it's all perspective on when involvement began or if there's involvement at all. And so speaking to the investors maybe looking at this and potentially interested in the company, maybe they have the bike at home.
I don't see the post. I'm looking
for it. And they're looking for a way
I don't look
to
at top
use
though,
this
I guess.
earnings volatility as a potential entry to the name. I looked at a strategy that I oftentimes would refer to as sort of a buying of the dip.
What's it matter? What's the point?
Where the best case scenario is actually a price at a lower point, but it's a neutral to bullish strategy. Selling.
Oh, that's why Nat Gas ripped.
1/2 put ratio.
Freeport LNG seeks permission to start compressors.
This is a trade that is
I don't
done
know if it's
for
3
a credit. So in the event that all of these options are out of the money,
trains.
well, it's done for a credit, and so you'll see that leveling off above that 12.5 mark, you just simply would keep that credit and move on if those options expired worthless. But most importantly here, Jenny, is the risk on this trade is if these options are in the money in which you're buying one of the 12.5 strike in February and selling 2 of the 11.5s, even if they're offsetting through expiration, assignment and exercise, you're going to be left with 1 extra short put. And so what happens when you get signed a short put? Well, you have to buy 100 shares of stock, or you're going to be assigned those 100 shares of stock as it would be
they saw the reports
so
of the
with
most
that is
money
your
made
risk
on
in
lent
this
stocks was
particular
GME.
trade
And
if these options were in the money. Effectively,
Just
the break
kidding.
even is $10. So this is a strategy as deployed
bullish.
for these prices that theoretically the risk is that you're going to be a shareholder at $10. If that's
biggest
something that's interesting
fund.
to
I'll read this when
a
this is
trader or
over.
investor, the stock's almost 13 right
I'll
now.
read the-
So you're
the
doing a
rate
strategy
height.
that'll lock you into buying it at 10. But in the event that it never gets near that level again, you do it for a credit. So you're paid in the event that it does just go higher. So what are some of the downsides? Well, some of the downsides, of course, would be if this stock goes to 20 tomorrow, well, we have a capped upside of just that credit received. But in the event that it does go lower, where if we just bought the stock here, we'd be at full penny for penny risk. This we're effectively just locked into buying it at $10. So if that's something that interests an investor, they still have that full $1,000 at risk for every one of these that would be done. The risk of Peloton going to 0, but a way to accumulate shares at a lower price in the event that it moves lower.
If Peloton moves to 20 tomorrow, that will be an absolutely wild day. But anything could happen. Peloton does make pretty massive moves on the backs of its earnings. So we'll have to keep that one on our radar. But also important to keep in mind for both of our example trades today, multiple legs can lead to higher transaction fees. Short options can be assigned to any.
I guess this guy started making posts. That big candle to the upside. Big candle back up on SPY. This guy had a post 5 months ago. Norwegian Oil Fund, which is one of the biggest funds in the world, sold off their GME position right after the sneeze because their algos can't stand volatile price movements. However, one little sneaky went rogue and bought a share in hiding for the fund and is still holding. And now 5 months later, I imagine they maybe just held one share as like a placeholder. So it stays on certain lists, I'm not sure. Anyways, holy cannoli, the world's biggest fund, the Norwegian oil fund, bought 19.5 million worth of GME between September 22nd and January 23rd. September. So this whole time they've been buying. Yeah, I know under 25 is good. I made a post last year about the Norwegian. Yeah, that's the one we just read. Just saw a note in our national economics newsletter that the oil fund had bought a ton of new stocks the last month. I take a peek and oh boy, oh boy, oh boy. PSA, this fund is fully transparent. All their stock positions and real estate investments are completely public. Okay, cool. Nice. MGAM bouncing off VWAP with a pretty big candle. SPY, I don't know what that dip was or this rally is. And GME's just been dead ever since. Yep. Anything GME related, even stuff not GME related, they're making some bullish on GME. SPPI looks like it wants to break. Maybe retesting that high. Well, if we don't get our move today, probably do either close some shares or do cover calls tomorrow. Start the cover call train. But this chart, I mean, it still looks bullish. We're in the end game now. Yep, been hearing it for 2 years.
Alex, we are seeing the stock up over about 4% at this point in time, but they did miss on the revenue side of the earnings announcement here. They came in at $27.03 billion versus the street's estimate of $27.95 billion. Earnings per share actually did beat at $3.62 compared to the estimate of $3.58. And they did make some comments about seeing potentially a mild recession in 2023. We did see a revenue decline, which is actually a little bit shocking when it comes to the company because they did try to guide a little bit lower in their previous earnings announcement. But they also did raise their quarterly dividend, and they announced a $5 billion stock buyback program, which obviously is nice when you have stock buybacks, depending on the investor, but it is only about 3% of their overall market cap, so it's not as significant as, say, Chevron's, where we saw a pretty significant buyback compared to their market cap.
How's that
here.
going
But
since that news?
overall, you did see a slowing in China. The international segment did see a little bit of a drop compared to what they were estimating. And
they did all that
also
bullish stuff
seeing
and then
some
earnings
currency
tanked it?
headwinds still. Now, this is
Crazy.
an industrial company, Alex, so as we see that dollar going down, that should actually provide them a little bit of a tailwind tailwind here.
I mean, even General Motors is getting more of a move than GME.
If the dollar's going to go down and when the dollar is going to go down. But the China reopening story.
This chart actually looks a lot like GME.
Tailwind for them
just
here in
from
the near
here
future.
on,
if they can get
doesn't
those
it?
volumes
For
up
now,
over in China,
General
in
Motors
the
getting that
international
breakout,
segment, they might be able to expand their operating margins, leading to greater profitability.
Yeah, it's supposed to be us today up at 25
That's really what the street is really focusing on here.
And the relatively less exposure to international has been one of the optimistic points for UPS over the past few years, but we're sort of watching that changing of the guard elsewhere. Things like airlines and some of the more internationally exposed airlines have started to outperform the more domestically focused Southwest, for example. In some calls for similar with FedEx and UPS, UPS being a little bit more domestically focused.
Let's get my capital back out of GME.
I just find it interesting
and
start dancing, peculiar that the message and the results don't paint the greatest picture, yet you're seeing a rally here today. Is that maybe a situation where, although this is the estimates, there were whisper numbers maybe for even worse?
A little bit. So really we are seeing this push to the upside here because the optimism of greater traffic here in the near term. Yes, China and the international segment is a smaller segment of their business, but it still has a significant impact.
Yeah, it can move big. This thing's going crazy.
Alone had a $331 million impact to the bottom line. That is fairly significant. The issue that you're having here, Alex, is if you don't have that much traffic or the volume is not high at a certain level, it causes the expenses for the aircraft or the ground shipping to be greater, right? The more volume you have, the cheaper you can be able to provide a service. So the optimism right now is that with China reopening, we start seeing the Asia Pacific markets reopening as well. Greater volume is going to go into those businesses, bringing in obviously higher revenue, but also being able to lower those costs, increase in the operating margins that leads to profitability. I think that's where the marketplace is really pricing in a significant or potentially a significant move to the upside. And also when we are talking about, once again, those dollar headwinds, those will be tailwinds in the future here when you're talking about multinational industrial companies from John Deere to UPS. That's where we would see a little bit of an impact.
It wants to keep coming down.
That's where the optimism is for the stock.
Yeah, and maybe also, too, if we're kind of reading the tea leaves a little bit, if I'm UPS and I'm foreseeing a revenue decline, I'm foreseeing a mild recession, their words, then I'm going to tighten the belt a little bit. I'm going to focus on costs. So then if I'm, XYZ investor and I don't see the same macro situation and maybe I'm a little bit more optimistic, maybe I see this as opportunity to get involved with a name like UPS. So time will tell ultimately how this all plays out, but always a pleasure. Kevin Green, Senior Markets Correspondent for the TD Ameritrade Network with the latest on UPS. And moving from UPS to another name that is better known by its acronym in AMD as we look ahead to its earnings. We heard from Intel. And the way that this thing's been trading, it was as if the Intel losses are potentially AMD's gains.
I know, and I would have actually thought that Intel almost portrayed a dark cloud over AMD's earnings. That was not the case at all. I read one analyst note that really highlighted Intel's data center weakness, but we didn't see shares react in negative fashion at all to Intel's report. And now I'm actually seeing the fact that the street believes there could be some positivity. Intel's losses, AMD's gains, sort of like what you said, Alex. But AMD, mind you, did plummet 55% of its value in 2022 as declines in the PC market spooked several of the investors and the analysts covering this name. They've been in a nice recovery so far this year, really rebounding about 13% for the month, which is not even some of the greatest gains we've seen across the tech space. But tech stocks collectively are pacing to close out their best January since 2001. So just really riding some of the overall strength. But analysts are really still holding out hope for this company. In its previous quarter, their data center revenue made up the greatest portion of their overall revenue and rose 45% from a year ago. This business is looking even more lucrative with the launch of their new generation of data center chips, those being the Genoa chips, which did launch in November. They already have cloud customers like Microsoft, Oracle, and Alphabet as clients. And more impressively, they've dominated Intel's data center chips. Intel unveiled its latest iteration of chips on January January 10th, which are called the Sapphire Rapids. Those have gone through 4 delays and came to market 2 years after Intel initially promised. So for that reason, AMD has been able to mitigate some of these headwinds perhaps a little bit better than its peer Intel, which I think signal the fact that just because Intel saw a pretty disastrous move following its report doesn't mean that we're going to see history repeat itself. The Street is expecting earnings of about 67 cents a share. This is down from a year ago on revenue of about $5.5 billion. We recently saw a ton of analysts update their coverage, some to the upside. Susquehanna, Truist, Barclays raising their price targets, while KeyBank and Bernstein reduced their price targets. Although of this group of analysts, every single price target, whether it was reduced or raised, still implies upside from AMD's current levels. So the Street does still feel like there's room to run for this stock. Some are cautious on this optimism. It wasn't all bullish, at least from the analyst community today, Alex, given the overall run-up we've seen in semi stocks. We could see this, they think, potentially come crashing down. But so far, I think you've got to ride some of this optimism. This is not the same company as Intel, and I think for that reason, we could see a completely different reaction.
Yeah, and they're in different stages as well. I mean, you look at AMD. AMD is becoming a major player within semiconductors after being a company trying to break into that role. Intel has been a primary player within semiconductors for decades and is becoming stale and somewhat has been possibly a little bit more complacent. So they're trying to avoid becoming an IBM-like tech company, where AMD is that new shiny sort of company that's really broken into the fold over the last few years. I know it's been around a while, but it's really become a major player over the last 5 or so years. And was in the right place at the right time. We saw a tremendous boom of semiconductor demand throughout the pandemic period. There was so much of a movement towards working from home and expanding infrastructure and the need for those semiconductor chips. And AMD was there to fill that void when it was needed. Intel was, of course, struggling and having trouble getting products to market to meet that demand. So now that that demand's gone, that kind of one-time opportunity is sort of off the table in many ways. But what I will say is, obviously I can't say whether it'll be a positive move or a negative move, or if they'll beat or if they will miss, Jenny. What I will say is, if AMD has a disappointing quarter or a positive quarter, the same reasons to explain away kind of the semiconductor as a whole impact won't be there the same way that they were for Intel. Intel, it's been able over the years to be like, hey, this is Intel's struggles. If AMD and Intel are both struggling, it's likely going to be perceived as, hey, semiconductor companies are struggling.
Yeah, and that's a really good point. And that would, to me, then also signals some trouble ahead for NVIDIA, who reports last of the group. So that is a really good point. We will have to see if this is a trend, an Intel-specific struggle, or AMD's able to outperform. It's somewhat of a peer, but I'd also say, yeah, I do group Intel as more of the older wave, AMD being the newer wave. But going with maybe an optimistic approach here for our example trade today, what are you thinking? Because I do think, at least based off the street calls today, things are looking a little bit brighter than what we saw with Intel.
Yeah, no doubt.
Fine, moving back up.
Earnings, and there's still that room for uncertainty and big moves. Market maker move is quite large in AMD, as it typically is, upwards of
$4.96 coming up
at the current prices here. So expect potential volatility, and in order to combat that, looking at a premium selling strategy more in the neutral to bullish camp, Jenny, as opposed to just outright bullish for those who are optimistic on AMD's prospects. February 70.65 put vertical being sold for $1.25 credit.
Yeah, it's moving up.
Most importantly, it's a risk-defined spread. So even in the event of a catastrophic down move, we know that max loss going in. That's $375. 68.75 is the break even. Pretty close to where the market maker move would target.
What do you think about buying more?
That break even. So
buy more GME
it really
calls?
is a bullish strategy. It has
for those
that
ones I bought this
neutral
morning?
element in the event that it's a non-event earnings
No,
announcement.
I'm gonna wait until we get confirmation of a move.
Takeaway for this particular strategy, but for $1.25 credit,
so far it looks like
that
these are
means
just gonna
$125
come
max
worthless.
profit if these
I
options
can't sell them today, or I would have already sold them.
3-to-1 risk-reward ratio, 68.75, elongated Z risk
But yeah,
profile.
I'm waiting for volume and price action.
Look at these strategies almost on a daily basis.
And then I'll average
I would be shocked if tomorrow was a non-event, but obviously that is sometimes dictated by the overall market activity. Thankfully, today we are in an
I'm not just
uptrend. Tomorrow,
bullish,
everything could
no matter
completely
what
change
right now.
ahead of the
The
Fed
chart looks
announcement,
bullish
of
and
course.
everything,
Keep
but
that that on our
I don't trust
radar. But that
GME.
does it for our FOMO segment today. Now coming
It
up
dropped
next,
below
we'll
that
dive
level, that
into the
19
streaming
level,
space.
lost
We were
trust.
looking at Disney,
It didn't
Paramount,
rally.
Warner Brothers, all
Didn't
higher
rally when
today
the
despite a
timing
mixed
seemed
pick.
like it should have. And maybe it's doing it now, but yeah, don't have the same conviction in a rally. But that said, I do still think it's going to, but I'm not willing to put more capital into it until we get more confirmation of the move. This is very strange. This whole bit so far. OpenAI has released a tool to help tell when text is written by AI. It's genius. CU's Breton says needs to see more progress by Twitter to fully comply with Digital Services Act. Oh, flies moving up. Alright, it's 1:45. Over 2 hours left. I'm hit a new high there. New high on the day. If I'm adding to anything, it'll be my short MES, which I wanted to do, I just haven't. It's been good because it's stayed up. But maybe now is the time. See if I can add to it. Hey, I still have enough margin. I added one short MES up here. And I'll probably hold through the FOMC. And if there's a big dip first, I'll just probably sell out at that. Because FOMC, honestly, like the dip, the candle could literally move down, you know, have a huge move down just in the first couple minutes, or move up. So I might have a stop loss to the upside, but maybe not, because it does its first move to the upside. It'll be probably pretty large. Get stopped out pretty. And I have 8 of these short MESs, but it brought my cost basis down to 409,906, which is not as nice. Why do you do all that? Wait, what are you doing there? Anyways, yeah, so he's down 1,100 today, but still up overall 1,200. Probably, I'd like to keep averaging into it, so maybe one more before today's over. It looks like it's breaking out. There it is, new high, 403.99. So, I think 404.97. If we hit that, I'll open up another short. Wow, Squeezeville.
raised his price target on Disney to 122 from 110 and kept an outperform rating, so definitely more bullish on Disney. Says earnings will be an important report. Of course, there'll be Iger's
Wow, look at
first
that
since
squeezy
coming
miss.
back to the helm. Find an update on improvements in direct-to-consumer losses.
Don't need to worry
Should also
about
note
GME
that Goldman
squeezing.
Sachs
SPY is doing it for us.
upgraded its price target to 119 from 118. Also has a buy rating on Disney.
This
Macquarie
ETF that tracks the
analyst
biggest
also
index
boosted its
literally
price
moves
target
more
on Warner
volatile than
Brothers
GME.
Discovery
And we
to
can't get any
$20
margin on
from
GME because of
$16,
how volatile
kept
it
an
was over 2
outperform
years
rating
ago.
on the shares. Says results could be tough again, but
Seems
believes
legit.
the bad news from the merger is now done.
It is moving up.
Thinks the upcoming combined HBO Max Discovery Plus streaming service could help reveal the value of these content and distribution assets. So says this is the top pick in the group, actually. We're seeing shares, though, of all three up. Paramount's up 0.7% despite the downgrade. Walt Disney up about 1%. Warner Brothers Discovery up 2.5%. And Netflix basically flat on the day. As I said, he has a neutral rating on Netflix.
Maybe a little head and shoulders here.
Tons to get through here.
I don't know.
Obviously, we're going to hear from these companies all
though.
very, very soon, and we'll see how it all shakes up. But
A gap fill would be a
Caroline will leave it
huge move
there.
today.
Always a pleasure, Caroline
But
Woods,
it
Senior
could
Markets
happen.
correspondent
I guess that's
for
not
the
that
TD
too
Ameritrade
huge
Network.
anymore.
Coming up next is Under 30, looking at AI with George Tillis. Excited for this conversation. Stick around. We'll be right back.
Doing the similar type deal it did this day. Gap down, just completely retraced, and then blew out the top. I don't think it'll blow out the top here, though. At least not today. We'll have it stop 405. Or maybe a gap fill. Maybe a gap fill. I could add one here, and then if it gap fills, add one more there. I still have quite a bit of room because my entry on the first 7 was like up here.
sector front as well. I think this is a very interesting company, but one of the things I did end up finding out about it from a customer standpoint, they actually have a lot of exposure and very few customers, especially companies like Baker Hughes. If you also consider Rio Tinto, these are a couple of large mining and industrial gas companies. But I think the company itself is growing its revenues plus 20%, but the challenges still are with companies like this, despite the nice movement we've seen, is profitability, which the company itself, right now, based on estimates, is not expected to break even until 2025, but things can quickly change. I think this is a secular technology that is now becoming ubiquitous as we see it evolving over time. And one of the other things I will mention here, which again might be part and parcel of what we're seeing with C3AI, is the fact that if you look at the appropriations spending bill that was passed at the very end of last year from Congress, there was a lot of money allocated for the public implementation at the federal government level for AI technology. So there's going to be a lot of customers that are going to be growing, not necessarily just in the private sector, but you also have to think about the public sector as well.
What a time to be alive, George. But kind of looking at this company and trying to understand sort of the tradability, the investability, and I like to kind of communicate through trying to make comparisons, even if at times it's a stretch. Is this, in a way, if you're looking at this within the tech sphere, kind of the equivalent, based on what we're looking at here, breakthroughs and the research, sort of like biopharmaceutical companies? Well, they'll make a breakthrough, they'll have a new test, and it'll explode higher. Are we sort of looking at the tech equivalent to that, with how cutting edge some of this technology is? But at the same time, it could end up just being a straight failure at the same time.
Well, I mean, I think the breakthrough is a great word to put it. I mean, AI has been in development for a very long time. But I think now it's become very apparent of the power of OpenAI. I actually signed up for OpenAI, a couple weeks back, used it for 3 days. It was actually phenomenal, impressive. I can't say anything else about it. But the challenge has been access. Effectively, their servers have been down because so many people have signed up for it. Corporations are now pushing towards AI infrastructure, and you have to think about the value propositions. It's about rapidly deploying information, rapidly accelerating search queries and indexing information, IT applications, everything that has to do with intelligence. And that's, I think, very important in the public sector. But I think, we're seeing a huge run up because of the market run up we're seeing in January, plus the AI news. That's sort of a double run up that we've seen in AI as a stock, but it doesn't necessarily mean it can't continue from here. I mean, actually, if you look at the chart, it may end up running perhaps to 23.5 before we find some resistance, but that may be also coincidentally part of what we're seeing with the overall market. We'll have to see what happens with the Fed announcement this week, because that might add some volatility to the markets. But C3AI is a company, I will say just quickly, it's a $1.8 billion market cap. It has $850 million on the books in terms of cash. It's burning about $240 million a year, so there's about 3 years of runway cash available on its books. So the risk of dilution is there, but it's not as bad as, for instance, companies that don't necessarily have any cash on the books at all.
Right. So, George, I think that's a good point, because to me, I look at this name, I just, based on the fact that we don't discuss this very often, I say this is a fairly speculative name. But to your point, it does actually have somewhat of a balance sheet it's been building. It's not, one of these brand new names that has absolutely no credibility. They do, on the other hand, actually have some cash they're generating. I think that's a very good differentiation, because a lot of these companies do feel fairly innovative, but also then risky. But this company now up a whopping 85% over the last month, so that run has been impressive. We will leave it there. Appreciate all of your insight, George Tillis, Senior Markets Correspondent for the network. And that also does it for Alex and myself. Ending on a positive note, markets still in the green. We have the watch list with Nicole Petalides coming up next.
So I was thinking, I don't know why I didn't think of this before, but as I'm doing micro ES, I can do multiple contracts. It's not the big one, which I only do one because they're big. But I could have scaled out and scaled back in and kind of just kept it more liquid instead of. I'm trying to scale in more now, but at what I think it could be lows, or at least temporary lows, I could scale out some and I still would be positive on the play, and so I'd still have cushion to, you know. So I need to remember that. Having all these contracts, say, and it comes down, I think it could be a low. Because this data came out, and I saw this, and I'm like, could close now, but I'm gonna hold for the long term. But I could have closed like, you know, 3 or 4 contracts, and then just sat on it, and then today, just like I'm scaling it more now, I could have just scaled in heavier, basically. It is putting a little more timing on the market, which I try not to do. Try and do it as little as I can. But you have more contracts scaling in and out is nice. There's no wash sales, nothing like that, so it's easy to just sell some here and then or buy to close here and then sell to open some more, you know, up here. That is a nice thing about using the micros. Whoa, nat gas, big drop on. It's a tight range, but this thing just drops like up 1%, down 1% intraday, like crazy. I tried to short it here, got a weird fill, and then it closed for some reason. I haven't played it since. But you do, there's like 3 contracts on this, and this is a $400 move from here to here. Or 500. So finding the range and just trading in it. The last while has worked pretty well. But then having overnight short exposure on that gas really has been the winner on it since December 15th or so. It's just been on a downtrend for like a month and a half. So doing your trading intraday and then ending the day with a short, basically. All right, GME's getting a little move up here. I mean, it's just been so much weaker than SPY now today, though. Look at this. Nothing. And then this move was totally unmerited. This, I feel like sometimes we see this short attacking or this kind of blatant move to the downside before we do see a big upside on GME. So not to read into it too much, but I don't feel like that's too uncommon. There might be more nat gas news actually. That's a big candle. $403.39. All right. 405. See, if I had scaled out, you know, because even here, if I had scaled out like 3 or 4 contracts, then I would have been happy to average in even more up here instead of just 1 or 2. And I would have realized those profits, like, yeah, scaling in and out. Much more fun. $404.39. You're not done, SPY. You're not done. We all know. Fun's not over.
Rising today at
2
one
o'clock.
point, and they
2
still
o'clock
may
squeeze
be
hour
above
on everything but
8%.
GME. Here we go.
Around that level for most of the day, but GM had
What's
better than
pushing
expected
SPY up
earnings,
right now?
even though it did see some rises. The
IWM
company
doing?
did see profits soar,
IWM is even
though
leaving
the
GME
supply
alone.
chain issues were there. They ended up
Interesting.
easing up a little bit. Also, GM gave better than expected outlook for the full year 2023. Adjusted earnings per share beat. It came in at $2.12. Revenue missed, however, but it was still a growth of about 28%, better than the almost 11% loss year over year. And improving chip supplies really helped GM sell about 25% more vehicles than in 2021.
Or 449 is getting there.
Was almost completely offset by higher selling prices. And looking forward, GM expects earnings of between $6 and $7 a share, and that's down from last year's $7.59 record, but it's higher than the analyst consensus estimate of $5.57. That's according to FactSet. GM also expects higher sales incentives, but the company says that those impacts will be offset by the improving costs of and production of the supply chain bottlenecks that are continuing.
I'll put an order in. It's 407.6.5. I'll do.
I mean, it's amazing. We'll be talking later with Steve Wesley, who we'll talk about all of the automakers. So I'm looking forward to furthering that conversation. How about a name like ExxonMobil? Record profits, but had a tough start as far as the stocks goes. What's standing out now?
You're right. This stock did have a tough start, but it's also another one of those legacy stocks that traders tend to believe no matter what. It still has its old faithfuls. And so that's why you see shares still rising, even though there were mixed results.
Might be a little too high there, but we'll see.
The company had record annual earnings, and that's where people are still holding on hope of a better outlook for the rest of the year. Now, adjusted earnings per share did beat by 8 cents, came in at $3.40. Revenue beat estimates as well, came in at $95.4 billion. And ExxonMobil posted a record annual earnings of $55.7 billion.
Sergeant Bologna.
Crude oil and product purchases were also up during that year-to-year.
Little GME pop on it.
$51 billion.
Congratulations.
And then production and manufacturing expenses, however, fell year-over-year to $10 or it fell year-over-year.
All right. Thank you for all of that. Good to see you, Renita Young.
Thank you.
Good luck there at General Motors and Exxon. Thank you. Let's take a look at the bigger picture. Chris O'Keefe's with us, Managing Director, Lead Portfolio Manager at Logan Capital Management. Thanks for being here. So tomorrow's the big day. It's February 1st. We're going to hear from our chairman,
Don't let this reversal candle fake you out. SPY's going to keep ripping.
You know, I think after this big market move in January, being up nearly 6%, that's not actually helpful to what Chairman Powell wants to do here, right? I mean, he wants to
this
make
could
sure
be the
things
top
are slowing. He wants to get inflation, get inflation back in the bottle there. So I think he's going to continue to be hawkish here in his statements. I don't think he wants to let in animal spirits to drive inflation back up again.
And so do you think it'll be 25 basis points, and is that the right amount?
Yes, absolutely. I think that's what we're seeing in the dot plot.
That is a reversal candle. Maybe that is the top. I don't know.
Yeah, I do think that's I think that's good enough. If you look at what's happening out there, I mean, inflation. He likes to look at the personal consumption expenditure index, and if you look at that, it was at a 5-month low in December. And if you sort of look at the annualized version of that over the last 3 months, it's getting there. So we are seeing progress on that front. So I do think that we'll see another 25 basis points here, and then another 25 basis points probably at the next meeting. But I do think we are getting close to a pause. But I do think we're pretty far away from a pivot.
Okay, getting close to a pause. So when do you think that could come? What will be the deciding factor?
Well, it does seem. I think the next meeting, for sure. I do think we're going to see that pause come about. I think for him, deciding factor would be seeing inflation get back down to the that 2% level that he wants to see. But like I said before, I do think that he doesn't want to have to go back at this again. He wants to make sure we really are going to see inflation, do stabilize at this point. So he probably wants to see that the labor market also be, to calm down, just that job creation to unfortunately to slow down. And we have been seeing that. And the amount of layoffs we've been seeing lately has been pretty robust. So I guess we'll get more data on that by the end of the week on labor markets.
What do you think about when I think about all the other central banks? Because we have a few this week. We had Canada signifying a pause. What kind of coordinated effort do you think we're seeing here? Or where do you see the international story mattering to us here at home?
Well, inflation actually has been a little worse overseas in Europe. And when we peaked at 9%, Europe was at 10%. They struggled a lot more on the energy side, whereas we haven't had as much of a problem there. So I think Europe may be a little slower.
MSGM moving up
in their progress, but other countries, that are sort of in a situation similar to ours,
always are getting ready for an afternoon
with the U.S. I think China could be sort of an interesting to watch, because as China does reopen, Asia and emerging markets could see a lot more activity there and economically, and that might have an impact on their inflation measures as well.
Right, understood. So at this point now, let's talk about dividends and how to make money in this environment. You have some ideas about what investors
No one
should
knows,
be doing.
cold shower. No one
Yes,
knows.
Nicole. So we've been dividend growth managers for over 20 years.
But I do have
at least
something to say
myself
about
anyway,
that.
and my team. We're old hats at this. We've been doing it for a while. If you look at last year, just a difficult year for the market. One of the worst on record.
Still squeezing.
Well, basically, in an environment like that,
it seems like the consensus is 25 basis points. So if that's priced in, which it seems like that's what's priced in, then if he's coming out and actually does that, then that could cause a sell-off, right? Because buy the rumor, sell the news, basically. If it's higher, then that could definitely cause a sell-off. However, maybe 25 isn't priced in. Maybe it's 50 is priced in. It comes out 25, and then we rally. Or it's not a buy the rumor, sell the news. It's the market knows what it is now, so there's no uncertainty, so we can rally even though it's exactly what we expected. Yeah, ripping up here.
With all this slowing going on, I do think that investors are going to want to continue to turn to those more defensive names, that have that strong cash flows, more predictable cash flows through time, and also they can provide that dividend growth. They can provide the good value creation through time as well. So we're looking for a good year again for dividend growth, at least on a relative basis.
Yeah. I mean, so dividend growth is a good way to do this, dollar cost averaging. What about growth versus value, and where will you find the growth? What kind of parameters will be using to pick the growth stocks that you will pick?
Nicole, that's a great question because, when we look at the world, the dividend world, what matters the most to us and where we think we see the most value creation, and we've looked at this over time.
Look at GME inversing supply to the upside.
But dividend growth seems to, provide more value creation over time than just sort of level of yield. So we do look for companies that have, strong business momentum, these good business.
So it also, a lot could weigh on what Jerome Powell says, especially if he comes in line with expectations, if he says 25 basis points. But, what he says and his guidance and his outlook could move the market much more than the actual just the rate. And probably will. But you never know. It could be one or the other. If the rate is a surprise, it could move the market more than what he says. And, if the rate isn't a surprise, and then what he says could move the market more. So, volatility.
It's a very negative indicator, for your stock price. So that does matter a lot in this equation.
Yeah. And finally, just a big picture on the S&P 500. Obviously, we may get some volatility around the Fed meeting. If they do 50, we might see a sell-off, some people are saying. Any thoughts on the levels of the S&P 500? What might happen in 6 months, 12 months? What are you watching for? What range?
Well, first I'll say that January has been a surprise. We did come off of, a very strong fourth quarter. The market was up, 8% or so. So here we are again, up another 6%. And I do think there was some, a lot of the companies that do well in January were the ones that were probably were not doing as well last year. So there was, I think, some short covering in there. And I think, a lot of bullishness also got into the market as well. If you look at, China reopening and earnings reports,
look at GME. This
so
is
far
interesting.
have been okay. It's been slightly better than expected, but the outlooks have not been as good. So I do think that you could challenge January's performance and say, that probably unravels a little bit. I think you're going to see, like I said, we talked about earlier, the Fed being probably maintaining that hawkishness in his commentary. Tomorrow, look at the earnings that we've seen so far. I think this week is on like 35 or 40% of the S&P report. You'll see, the guidance there maybe being a little softer. We're seeing, operating margins come down, and we think that continues through the year. So I think that there'll be a lot of volatility. I don't know how lasting this rally is in January. I think you could see, again, a little more volatility. I think some of those names that rallied in January may not be the winners in the next couple of months here. So we'll see. We'll have to watch earnings and see how things go. I think it's been mostly sentiment that's been driving the market so far.
All right, and great strategies, and thank you for all of that. Chris O'Keefe,
Volume
nice to
super
see you.
low.
Thank you. Logan Capital Management, Chris O'Keefe.
Yeah, it's
thanks.
true, huh?
Thanks.
Still ahead here on the watch list, Steve Wesley will join us talking all
Yeah,
about
wow.
the EVs, the price cuts from Tesla, the
Gotta
price
wait.
cuts from
Gotta wait
Ford,
for that
the
news.
GM.
I guess tomorrow will be the big day on BBY. I don't know if we'll it'll be pre-market during business hours. Could see a lot of volatility on BBBY, regardless of the huge market moves that will probably happen. MGAM. Almost went long on that nat gas too. Just been trading this range. It's crazy. Barcoding. Yeah. Preparing. Follow us on Twitter, guys, at HappyMoneyYT. Haven't already. Whoa. Snap. 215 snap. Okay, I might short one of them here. Okay, added one more here. I'll do one more that top. Well, what I think is the top at least. This 405.
Company's margins. And C3AI is up over 28% today after it announced the launch of its AI product suite. The company said its offering will integrate the AI capabilities of other organizations such as Google and ChatGPT. Bitcoin, take a look. It was surging earlier. It's had a nice move right now. Bitcoin sitting at 23,305, up 480, up 2.1%. Good move today for Bitcoin. Okay, it's time for Technical Tuesday. We'll be bringing Kevin Horner, as we do every Tuesday, Senior Manager, Trading Services Education at Charles Schwab. Good to see you, Kevin. Thanks for being here. Our first name here is Micron. So started high, moved low, and it's on its way back up. What's going on here, and what do you see in the chart?
Well, what I'm bringing today are two charts and two different groups that have very similar patterns at the moment, both in a sideways consolidation. We looked at Micron last year in the summer after it had fallen through major support. This thing had a nice big double top at the at the $95 level, and we broke 66 with conviction back in June of last year, and really that has acted as a real solid resistance band for us looking forward. In fact, the last effort we made here just on Friday of last week, we didn't get as high as we had gotten back in mid-November, which was also a little bit lower than we were in August when we tested it. But I think that if you're a trader and looking at sideways consolidations like this, you are probably leaning more towards that range holding and trying not to be too aggressive in the middle of it all. So really the range we're seeing is about $48 on the bottom and about 66 on the top. Now, in the middle of all of that, there is a kind of flat, maybe gentle upsloping 50-day moving average right around 56, and that could provide short-run support. But I think ultimately what you're looking at is still a consolidative window of time where a new price level will only really make itself available if we break one of those areas, under 48 to the downside, above 66 to the upside. That said, it's kind of in the middle of it all right now. It doesn't really present one way or the other, whether you're bullish or bearish, because either way at this point, you're a little bit in a scenario where your proper risk versus reward doesn't play out ideally just yet. So I think we're probably in a holding pattern, but I think that the pattern itself, this broad range we've been watching, continues to be important for the stock, and it might just require more time in that range before breaking one way or the other. And I think if you've not been trading it, there's really not a whole lot on the chart right now that says you need to be long or short at this point, and a lot of traders would simply allow the trade to play out based on breaks of those two previously mentioned levels.
Yeah, and you see that at least some momentum going to the upside, but as you said, it's hard to know which way it may be headed. Thank you for that. A good look there at Micron. And then the next name, Target. What do you see in the technicals there?
Well, as I noted, it's pretty similar here. The biggest thing is that with Target, you had a major move lower on that earnings gap down in May of last year, and it really just struggled since. Now we have managed to kind of get into a new range, and really that range is about 140 to approximately 180, maybe 185. But the short-term traders are probably a bit enthused by the action you've seen in the last 3 days, short-term bulls, I should say, because you've managed to hold the 200-day moving average 3 consecutive days. You've also managed to push through the highs of Friday from last week, where we kind of got rejected a little bit. That was right around 170. So we've managed to push through that a little bit. Now that might just be optimism in the face of the FOMC tomorrow that could easily be thwarted or denied. However, if this is going to be a positive move tomorrow, the potential exists for Target to just drift into that 180, 183, 184 range. And that becomes a pretty great spot for short-term bulls who maybe have only gotten long in the last 2 to 3, 4 weeks to maybe consider taking a little bit off. Now, remember, you don't have to always sell everything you have when you run into resistance, but a lot of traders are apt to at least sell a portion of a profitable trade as you near resistance, with the belief that if you pop through, you can always add back maybe what you took off. So from a strategy standpoint, I think we're going to eyeball 184 if things go well for us come tomorrow.
Yeah, and what's amazing is how resilient the consumer has been overall. I think a lot of people have been taken aback by that. I saw Mizuho, by the way, has raised their price target to $95 from
40
$70.
minutes to
so I thought
GNS
that was
close.
an interesting point as well. What about the big picture here? I know you're waiting on the Fed, like all of us, tomorrow when it comes to the
broke
overall
out.
market. Anything specific on your radar?
Well, as I said, I think that the Fed could give us plenty of reason to continue this optimistic approach that we've seen over the last 4 weeks, 5 weeks. It might be a little more optimistic than many bears would like to have seen, and yet we have held up incredibly well. You used the word resiliency, Nicole. I think that is absolutely apt in this market. I think we've managed to take a number of questionable signals on the chin and roll with it a little bit, with the belief being by bullish traders that the Fed is more apt to either slow or really take a pause in the near term. All of that remains to be seen. I'm going to, as a trader and investor, I'm going to listen tomorrow intently with what Fed Chair Powell has to say. We could easily find ourselves trading at 4,100 tomorrow pretty quickly. It's over 4,100 on the SPX that things get really interesting on the long side. We could easily drift higher into that 42, even 43. By the way, 4,300 was our August peak, and nobody thought we had any reason to be there in August. Well, we're not too far off. A 50-point move through 4,100 could easily push into the 42.50 to 43 ledge. Now, that's not enough. That might be more optimistic than some would want to be. That said, it all really does hinge on how we digest what Mr. Powell has to say tomorrow. So I think you at least have to be aware that it's on the table and a possibility.
Yeah, I haven't seen 4,100 in a long time. Kevin Horner, thank you. Great to see you. Appreciate it.
Thanks, Nicole.
Charles Schwab. Coming up next, time to talk EVs. And Steve Wesley knows all about them. Now, we'll talk about Tesla and the price
Just the top on SPY.
Was that
one last little push.
A boost?
Maybe, I don't know. I have an order for short 3 nat gas contracts at the last top. It was 27.05. It breaks the 27.15. Close it out for a loss, but open one up there. All right, GME 230. What you got? An hour and a half. Ooh, MSGM projecting that breakout. Pretty thinly traded even on a high volume day. Might be the top on SPY. I'm up to 9 contracts.
Ford, 4x larger than Toyota, 2x larger than Volkswagen, and General Motors is losing money on every EV. So the question is, great news for consumers. What does this do for the auto company's bottom line? And the big issue here, if you're an investor, especially for Ford, are the trucking wars, because you've got to hand it to Ford. 42 years in a row, biggest selling vehicle in America, Ford F-150 Lightning, great truck, but they only sold 13.2 thousand units last year. Rivian, great truck, they only sold 24,000 units. Tesla's about to start selling their Cybertrucks in Q3.
Rivian almost sold as many Ford F-150 Lightning.
And if they sell even a fraction of the 1.4 million pre-orders, that could really cut into the Ford Auto Company's revenues and profits. So Ford's going to need to buckle up. Let's hope they can hold on to market share. We'll see.
I mean, that doesn't even remote. I knew that the Cybertruck had all those pre-orders, over a million. You said 1.4. You know, I heard 1.1. Whatever. It's well over a million. It's a crazy number. You have to put a small amount down. So, you know, we'll see whether or not the people actually commit when it comes time. But a million versus the competition of the F-150 Lightning, which is a beauty. But you're talking 15,000. Did you just say 15,000 sold? Is that right?
I said 15,000. Now, the big question is, what do they grow to? And I have a feeling they will ramp up quickly. They should be at 50 or 100,000. But the sheer size and magnitude of Tesla's facility in Texas, combined with their expertise in manufacturing and, by the way, lower battery costs, I think they could blow by the others. And again, no one has been able to break into the Ford 150s market. If Tesla manages to sell 200,000, 300,000, 400,000 units this year, moving to something closer to 500,000, 600,000 next year, they will put a dent in Ford's most profitable sector.
Right, understood. And you said no one can catch up to Tesla, not at this time. The way they're making profit, you said GM won't be profitable for years to come, maybe till 2025. Tesla had the ability to cut the prices. Now we see the Model E over at Ford being cut. So what's the final takeaway here? Is there room for all of these names to do well?
The short answer is no. Look, the auto industry contracted 8% last year. At precisely the same time, you see 25 new electric vehicle makers coming into the sector. There is going to be a shakeout. So what everybody needs to be looking at is
I agree with
who is
that.
growing and who can maintain profitability. Now, Tesla did 1.3 million units sold last year compared to 60,000 for Ford, 50,000 for GM. So they're already 15x ahead. The big question is this year, based on Tesla making the early price cuts, they look like they're going to vault ahead from 1.3 million units sold to something closer to 1.9 or 2 million units. If Ford and GM are still where I think they'll be in the 200,000 range, maybe a little north of that, Tesla's still going to have a 10x advantage. But they're no longer the major competitors. You got to look at Volkswagen. They've got major plants up and running in Europe, North America, and Asia. And the real challengers are probably the Chinese. Get used to hearing a lot about new brands like BYD and SAIC. The government's subsidizing them. They've got an advantage in the battery cost, and they're getting ready to come to Europe and North America. So get ready for the big truck smackdown and the big international car battle. This is going to be a fascinating race.
I love it. I love it so much because obviously it's fascinating. We love to see the battle. And of course, you want a fair playing field, but there's no doubt that Tesla has started early in this game and doing so well. I mean, you also have we talked about the Cybertruck. The semi truck already has orders too from a lot of the big corporations. So they certainly bring a lot to the table. What about these other names? Are there some of these names abroad that you think could be formidable competitors? You mentioned BYD. I think of NIO and XPeng, and you mentioned a newer one, XAIC. You know, what about as China sales likely to increase?
So China sales are absolutely going to increase. And again, look at the big picture here. All of a sudden, after people worried about U.S. car manufacturing prowess, you've got Tesla, number one.
No, I closed my cover calls.
Australia.
I got shook out this morning.
Tesla.
This increasing, little bit increasing volume in this rip.
In the U.S. for the first time in 25 years, and a U.S. brand is beating.
I took profits on some of them, took small losses on the ones I opened this morning.
Tesla, the Model Y,
but the ones opened yesterday, those were profitable.
Largest selling car, gas or electric, in all of Europe. This has the Europeans going
So,
crazy.
and I still haven't opened any just because T+2. I
Nothing
think we
stays
still
the same in the auto industry.
still could get a move today. Tomorrow I'll probably be running some covered calls though, if today's not
makes
big
great
ups.
cars. They're the master at selling low end. They may be where Honda was 30 years ago in the US market, and they're good cars. And they're gearing up to go international. So that's something Tesla has to be looking over its shoulder about. NIO looks pretty good. I'm a little concerned about their ability to produce vehicles profitably. And now you've got the Vietnamese maker, the first one, at an even lower cost point with VinFast opening showrooms as we speak in California. So it is a whole new world. But if you're an auto investor, it's no longer enough to know what the Japanese, the Europeans, and the Americans are doing. You need to be looking at China, and it's going to be fascinating.
Now, I want everybody to know, you used to sit on the board of Tesla, isn't that correct? So
that is correct.
At this point now, obviously everybody wants to know about Elon Musk. Is he still the right guy? Is he still focused on Tesla? I'd like you to answer that. As well as, where is the fair valuation of this company? There are many people who think it's fairly valued right where it is. There are some who think it's going to 500, and some well over 1,000 in the world of autonomous ride sharing. Give me an outlook and where Elon Musk fits in the picture.
Well, I was hoping you were going to ask some tougher questions. Well, let's tackle those too. First, I think Elon probably is the right guy for the job. Look, he's the father, essentially, of the global electric auto industry. He has led the field from start to finish, and he's not only developed the most innovative vehicles to date, but he's been a master at keeping costs down, bringing battery cost in-house, the first to really reap extra margins from what's called over-the-air software. So as long as he stays focused on Tesla, I think he'll be just fine. But focus is the key there. In terms of pricing, look, there's nothing magic about electric vehicles. The whole world's going that direction. Revenues are going to go up in that area, but you've got to look at the numbers. So here's what they are. Roughly $81 billion sold last year. That's up 45% over the year before. Now that they've cut prices, I think that number is going to rise. I think Tesla's on track to go from 1.3 million units sold to very close to 2 million sold. And the average price, even though they've done a cost cut, is likely to go up because they're going to be selling Cybertrucks, which tend to be more expensive. They're going to be selling their semis as well. Also, something no one looks about, and I just want to tease you with this, and we'll talk about it more in the future. Tesla also has a rapidly growing energy division where they're not just selling the power walls and the solar tiles for the roof, but they're selling 1.5 gigawatt power packs to utilities globally. So Tesla's doing something bolder, faster, bigger than just about anyone else. Stay tuned. It's going to take a while for someone to dethrone them.
I like that. We're going to call them a utility company too. What did you think I was going to ask you that was going to be harder? Are you buying or selling your shares? Well, what didn't I ask?
No. Predicting Elon's next move is tough enough. One thing I can promise is it's going to be exciting, but stay tuned on the energy front, because what customers are really looking for, especially as you move to electrics, are not just a car. They're looking for a turnkey solution. And that means, can you sell me the solar panels, the power wall, and the car all together? It's a whole new mindset. Millennials, Gen Z voters get it. Tesla's out front on it. The other auto companies are going to have to move hard to catch up. Ford's already followed suit. They have a relationship with Sunrun and LG Chem, so they're providing their own turnkey solution. The other auto companies are going to have to jump into this new world. But the promise out there that Mr. Musk has offered is, come with me at Tesla, and you'll never pay a penny for electricity or gasoline again. That's a pretty powerful value proposition.
Steve Wesley, let's leave it there. Steve Wesley, Wesley Group. Thank you very much.
Thanks,
Good
Nicole.
to see you. Thanks.
Bye-bye.
Coming up, time to talk AI. And what does ChatGPT mean for big tech? What companies may be left behind in the AI
My contract
race?
should get
That
filled
and so
here.
much
My short net gas says it's at 2705. And yet you're not filling. The bid is 2027. The ask is 2705. SPY topping out here? No way. All right, it fell. Whoa. Yep, there's a pop through it. Okay, my stop's gonna be 27.15. Actually 27.20. And if it does break 27.20, it's maybe a good spot to even go long on. Well, no, that's resistance over there. Okay, got into those three. I've got my short on that gas that I'd like to hold overnight. Even though at some point it should find a bottom, and maybe it's today. Never ending going down. And for a close, put the I'm just literally just trading in this range. So shorting it up here, going long down here, and entered my short here with the stop up here. The only problem is there's still a little resistance up here, so I might clip my stop. But yeah, and then I'll have a order to close it. I'll just do it at the bottom of this candle. Just 2635. Put that order in right now. But then I have to remember to close my stop limit. I'm gonna cancel other. Yes, this is what I want. I've not done this before on here. That is what I want. So okay, buy at 2635. 35. And then that will cancel my buy at 27.2. I want to cancel this order. I don't want to. Not going to do that for now. That's too confusing. Or maybe won't even trade that range. It's already 240. I don't want to be looking at it. Maybe let the after hours grind that nat gas down like it has, 4 or 5% almost every day. But it does look like it's bottoming here. It is at a historical support, so I mean, No signs of a bottom necessarily, but this increasing volume here makes me think it's bottoming out. MACD flip bullish, but it's so far even from the histogram. RSI is way oversold. Yeah, I'll take that. 2.6. All right, SPY, new high on the day.
We could just kind of work our way right back to the range that we saw there, or that we've been in, I should say,
GME's coming down.
3.5, 3.4, back to 4.3, hang out
Dollar
in the
really
middle
started
of that for a
dropping
little
at
while as we wait for
12:30.
that March meeting. But ultimately, again, I think it really comes down to the tone and the message that Jerome Powell provides tomorrow.
Right. Okay, Ben, thank you for all of that, and good luck ahead of a big week and a big day tomorrow. We'll have a great show tomorrow. I'm looking forward to that. All right, 2 p.m. tomorrow. Ben Lichtenstein, thank you.
Lichtenstein.
Let's switch our focus straight over to something everybody's talking about, and that is AI, ChatGPT in particular.
All right, now gas is moving up. See if it stops me out.
The Donnie's with us, CEO of Rain Technology. Thanks for being here.
Of course. Thanks for having me, Nicole.
So when we think of ChatGPT, right, writes emails,
GME is going down, SPY's going up.
I mean, I think some people are worried that
Yada,
they
yada,
may
yada.
lose their jobs to this. What does it mean? I'm not sure everybody even fully understands what ChatGPT means.
Yes. So this is a chatbot that is truly transformational. So ChatGPT allows you to ask any question about any subject in natural language, so how you and I would speak to one another, and it'll give you an answer in seconds. So I could ask ChatGPT for the history of pop music, and I'm gonna get an answer faster than I could type that question out. What's really interesting about this is two things. One, the answer is not being pulled from somewhere, it's being generated. So it's almost scouring the internet and creating its own answer. And two, and this is, from my perspective, my company, Rain, does work in conversational AI. What's so transformational is how human the interaction is. So, Nicole, if someone were to ask you a question and you didn't know them, you wouldn't answer robotically. You'd make inferences about them based on the context of where you are and how they're asking, and that's what ChatGPT is trying to do. It's trying to mimic human language and respond in the same way.
And what's amazing is it's generating its own response. So it's not saying the Wall Street Journal said on January 2nd this.
Yes.
It's saying I've looked at thousands and thousands of articles and here's what I think and here's my, which sort of, how much can you trust it?
Right. There is an NYU professor who referred to ChatGPT as AI's Jurassic Park moment, and I love this movie, so I understand the reference, which is we've created something that is so, incredible, but also dangerous and terrifying, and we've released it to the public, and the electric fence is not working yet, right? So you're absolutely right. We have this technology that you can ask any question and get a response within seconds, but you don't know where that response is coming from, so where it's being sourced from, or whether it's true, and there's no disclaimer on that. So you have people asking questions about investments, asking for medical advice, and taking that at face value. And to your point, when we ask Google those similar questions, we get links back, and we choose, which answers we trust.
Right.
ChatGPT is doing that work for us. It's generating its own answer. That's why it's called generative AI.
Look at this guy.
Us that answer. But again, it's drawing its
I'm on TV.
From the internet as well.
Oh, look, I'm on TV.
Let's talk about the names and big companies that we know that are already investing in this, involved in this, and how it can make a difference for those companies.
Sure. So it's no surprise that Microsoft has doubled down its investment in ChatGPT because for the first time in over a decade, Google is vulnerable, right? For historically, people go to Google when they need the answer to something. So
15 minutes, power hour.
OpenAI, which owns ChatGPT, has kind of opened the floodgates to big companies and startups going after this technology. What's really interesting here is that this technology, generative AI, is not new. So it's existed within Google and Microsoft for years, but internally. What OpenAI did is they opened ChatGPT up to the public, and more interestingly, they didn't say what it's for. They kind of said, here, use this in the ways that you see fit. So it's almost like they're asking us to tell them what the use case is, and the AI is learning from us. And that's so relevant to your question, because over the next 12 to 18 months, we're going to see a lot of companies pop up that are building on top of ChatGPT, but in very specific verticals like legal, healthcare, publishing. So that's when we're really going to see how this AI is going to disrupt existing companies.
I mean, just to blow our minds, we look at it, I mean, it writes poetry, it does essays. I mean, you just named all these different sectors where it's already being used. In fact, generates lines of code.
Yes.
Coders spent the last 2 decades in school trying to learn how to code, and here we go. And then that brings us to, what does it mean for jobs? Because when you put in ChatGPT into something like Google, people say, is it going to take our jobs?
Of course.
It's AI. You think that happens? I mean, we've already seen the transition of robots doing many jobs and kiosks. You don't have somebody to order your French fries, right?
So any company that is going to be able to use AI to save costs in the future is going to do that, right? So that's just a reality. And that's going to have a negative impact on some industries, some jobs. So white-collar jobs in particular are already feeling that pressure, and that's because a lot of the knowledge from those jobs comes from written text. So that's where ChatGPT plays. But there are other industries that can really benefit from this AI, industries that have traditionally been underserved by technology. So if you think of deskless workers, trade and skilled workers, again, my company is building products for workers. One of our products, Ortho, is in the automotive space. We are building AI so that technicians can get auto details about a vehicle at their fingertips, right? And so if you think about the fact that this AI can actually give some professions access to information that they didn't have anymore. They can be more efficient in their jobs. They can have information. They can actually have access to training to get better at what they do. So without a doubt, there is going to be clear implications on the job market, some good and some bad.
Right. Cheating on an essay in college. That was, my mom read that in the paper and quickly called my kids and said, make sure you're not doing that. But, I guess there's always a downside, and regulation's going to be key that we have to wait to discuss in the next segment next time. Thank you for being with us. Nithya Thadani, thank you.
Thank
Good
you
to
so
see
much,
you.
Nicole.
Great topic, right, guys? CEO of Rain Technology. Coming up, we're going to dive into those earnings of UPS. Stock is higher after the report.
Oops. What can Brown do for you? Oh, still waiting on my 405 to get another short. That gas is just held up at the high. Or 461. There she goes. 9 minutes till CNS closes. Alright, I need my order back. I canceled it. Oh, 4076.5. See if I have enough margin still. No. Wah, wah. Those natty gassies. They tap me out. Alright, I'm riding these 9, I guess. 4472. Look at this V shape. Crazy. Like directionless. Put a line there. Oh, that gas looks like it wants to break out. $7.15. BBBY moved up with it. Yep, sure enough, got some volume coming in too. Got a little move to VWAP, with a WAP. What's that? CNS close prepping. We got 6 minutes to get their stuff in order.
Impact this stock in the future.
Yeah, and thank you for that global picture because, Scott, you know, what does this mean for a name like FedEx, too?
Yeah, obviously very similar trends for UPS and FedEx. FedEx maybe even a little bit more levered to China. UPS noted in their guidance that it was going to be back half weighted, and again, a lot
That's
of
crazy. Yeah, no volume at all on
so
BBBY, and then
said, you know, if volumes
spikes
get
down
going
here.
in the back half of the year or into next year, that could be very favorable for UPS. The same trends would apply at FedEx as well.
It looks like a penny stock.
It's just pretty uncertain right
Oh,
now.
it could be reversal candle on SPY.
We would go back to our commentary of those two names that we feel a little bit more comfortable about UPS. It's delivered really nice service levels throughout the pandemic, and think that they're really, like I mentioned before, controlling well what they can control. So I think they'll be positioned if we do see a nice turn upwards, and I think they're positioned also equally as well to navigate a tougher environment, which could come as well. So I think that's the one that we prefer of those two right here, but both move to the similar economic driver.
Understood. And Scott, you mentioned you like UPS better than FedEx if you had to pick out of the two right now. UPS, Scott, you have an outperform rating. What's your rating on FedEx?
Yeah, we're perform rated or neutral rated on FedEx. Historically, the two companies, depending on what time period historically you look at, usually UPS is at about a 3 or 4 PE point premium, and that's about where it is right now. And I think with UPS clearly has outperformed and done a nicer job through the pandemic and continues to be operating well. That's why we rated outperform and FedEx perform. FedEx is more in a more of a show me story at the moment. There's a lot of upside potential for FedEx. It just has to prove it after some tough quarters during the pandemic. So that's how we look at these two juxtaposed against each other.
I mean, Kevin, I know you were focused on some of the metrics. I mean, we saw the better than expected earnings per share. They raised the dividend, and the buyback, the $5 billion buyback the company announced stood out to you. Tell me a little bit about that. Why does that matter?
Definitely. I mean, it was a symbolic move. Obviously, it does have a little bit of impact when it comes to the stock performance, but it is only about 3% of the total market cap of the company. So it's not as big as where we saw Chevron, where they're trying to take on 15 to 20% of their overall market cap. But it is a nice sign when it comes to the investors that are out there. When we go back to the valuations, right now it's trading at about a 14.5 forward multiple. That's actually at the lower end of its range prior to 2019, which we had the COVID-19 pandemic. So you could also make the case that it is trading at a somewhat of a discount to itself. But the only area that I'm really kind of concerned about is going to be the B2B average daily volume. That actually dropped off pretty significantly towards the latter half of the year. And that is something that is a little bit concerning, that they would want to shore up in order to be able to provide consistent results here in the new year.
Yeah, and I think people are waiting to see what kind of growth we're expecting going forward. It's great to see you both. Thank you very much. Scott Schneeberger of Oppenheimer and Kevin Green of right here on the TD Ameritrade Network. Thank you both very, very much. Good to see you, and a good luck there at UPS. That's going to do it for us here on the Watch List tomorrow, 2 p.m. Eastern Time. Of course, we'll have a special edition here of the Watch List as we get the Fed announcement. So we'll break that down for you play by play. Looking forward to that. Thanks for being with me every single weekday. I'm Nicole Petalides. See you later.
I saw GG got a spike there. Getty. The payment on the bonds due today? I thought it was tomorrow. Expect an announcement of some kind after hours or before hours. Technically until February 1st to make $20 payment. Until February 1st. So before midnight tonight, or yeah, we'll see. Volatility maybe one way or the other. Barclays bought 600,000 shares. They have a filing for that. Share that filing on Discord. Let me see it. I mean, the upside potential in the short term for BBY, I think, is much greater than GME. I do think it's just more risky. So, capital allocation would, if you had more risk adverse, would be to go to BBBY. So that's $1.6 million worth. Not a huge amount, but it is something. Oh, I got stopped out on my net gas. Maybe a false break to the upside. Not sure. But it just wicked up there. Watched it trade in this range all day, and then when I finally enter, it breaks out. Yeah, it's breaking out now. SPY's also moving up. That gas now ripping up a percent. Whew. GME is not popping yet. AMC a little bit. Yep, we're at CNS close 2 minutes ago. Oh, I could get my other short. Get my other short on here now. Yeah. 5%. $407.6.5. Go for that short again. He's going for it. Huge, huge. Talking about AMC. Oh, Razor stake 600%. From what to what?
Bitcoin, of course, was possibly one of the most egregious pumpers told the last couple of years. So be careful as we see the market rewarding certain investments that actually have shown they can survive this environment. Those are the ones that are getting hit right now. Look at Caterpillar down after earnings. The flip-flop here, this market is pretty impressive, to use one word. I would say pretty unbelievable that we might be falling for some of the same tricks again. Companies like Caterpillar that actually did have a good amount of activity here over the last year were able to pass on inflationary pressures. The stocks that were at the highs, some of the consumer staples like a McDonald's, companies that demonstrated their value during this very tricky economic period are the ones getting hit right now. The bar is very high, admittedly, for Caterpillar.
Have a rotation,
McDonald's,
man.
An energy stock trading near 52-week highs.
Buy almost up to that level at 4.95-ish.
In this kind of bizarre
bipolar
fashion where it either is rallying speculative names and dumping stable companies or vice versa. Where is
BBBY breaks VWAP there.
That's what I'm hoping will.
Oh, I thought about
emerge.
getting actually some positions on BBBY, some options.
Earlier this
Maybe
year,
now's the
maybe
time.
at the end of last year, we saw the Dow
spreads just in
dividend
case there's
payers
good
doing
news.
well, companies with profits outperforming, but lately it's been the high beta ARC names that are coming back. Look at that fund up 4.1%. Are there some companies in Cathie Wood's list that will change the world? I'm sure there's a few. But over the last 2 years, we have learned that this is a very high beta trade that will cut you in both directions. So just be wary that there is still a pretty big gap between consensus expectations for what the Fed will do this year and what we've actually heard from the Fed. And when the market starts speculating in bubblicious areas, it has a tendency of ending in tears if the Fed does play some hardball. Will we get that tomorrow? I do think there's a window of opportunity here where maybe softball is played instead. So I can see the logic behind some of this, but ultimately, we still have too high of inflation, too much risk of economic slowdown, especially by way of inflation, that Powell is going to have to stay very much on guard. One group that I think is fascinating within all of this.
I got some debit spreads on
BBBY.
BBBY.
ITB up 4% today. If
See what happens in
Jerome
this news
Powell
after hours.
does listen to the stock market, and we know that he does, we've heard the Fed tell us that they are acutely aware of the real economic impact of asset prices. To see the financial conditions loosen by way of the stock market to this extent, I think must make us question whether or not we've gone too far in some of these rebounds. If you look at home builders trading the highest in almost a year, it in some ways suggests that Powell's damage has been very minimal, as we have unwound so much selling in housing. As far as the stocks go, the message to Powell might be that he has room to press even harder. Let's talk about that group, and let's talk about cars too, because the high ticket prices and the items that command those were the ones that hit the most in the last year, but now the market is thinking something has drastically changed. Two of our biggest winners on the day are Pulte Group and General Motors. Let's bring in Renita Young and Kevin Hanks to take us through it here. Renita, let's start with the basics. I mean, we're talking houses, cars, the stuff that was like the first on the chopping block last year, leading it here today. What's going on here in these numbers? Let's start with Lennar first and the home builders just crushing. Pulte is in the mix today as the biggest winner, actually.
Yes, let's start with Pulte, actually. So Pulte's shares are rising today. They got above 9% at one point. They may still be around that area, but it's on those better than expected earnings. Now, although new orders slid, the company was able to bring in more money because of the higher prices. Inflation worked in its favor in one way, and then in another, those costs of materials, they might have chipped away a little bit at profit, so they might not have been as high.
GME not giving us an ET plus
Let's
2.
take a look at some of the numbers there.
I mean, technically they have
Earnings
till
per share
tomorrow
beat
morning.
Estimates. Revenue also came in above expectations, and home sale revenue specifically grew about 20% to $5.05 billion. That was primarily led by an increase in the average sales price of a home. And that, in case you guys wanted to know, the average sale price of a home now in the United States is $571,000.
All right.
What?
And also it's been a 3% increase in closings with Pulte Group. So
I don't know where they're getting that data. Last I heard it was like 400.
Actually saw a decrease of about 41% year over year. And that's due to the higher mortgage rates, the lower consumer confidence, and also the less affordable homes for many customers. This all slowed down demand, inevitably, right? But the cancellation rate also grew about 32% during the quarter. That was up from 24% in the last quarter and up from 11% the year before.
This is another one of those examples where I feel like, and Kev, I want you to chime in here, is if this stock were down, I feel like we would be framing this with the exact same data, but in a negative way, right? So sales growth slowing, declining, but today the market in its state of some degree of like euphoria, I feel like we are getting here now as the S&P is pushing towards 41 ahead of such a busy week. It's prioritizing the fact that they threaded the needle on their prices, and so they have learned to offset some of these inflationary forces, and that maybe declines aren't as severe. All
right, SPY's coming down, looks like.
Could this be a report, Kev, on a bad day that would have gone the other way, or do you think we've definitively turned a leaf in housing?
Well, I believe, Oliver, and you and I have spoken about this many times, that take all the noise of the last 6 to 9 months away from this.
Whoa.
And remember, there's
That's a big drop. You hear that?
record-breaking
That was a drop.
demand for homes. So the volatility
Thanks for your likes, guys. I appreciate it. Got up to 40.
Brought to the housing market over the last several months. If we get to 3.5% on the 10-year as we are, and we settle there, and things become less volatile, I see that queue that was forming, people waiting for interest rates to get less volatile, moving back into the market. And Pulte is one of those companies that will benefit from that. Now, I'm sure they manage their business well, Oliver, but I'm not surprising that this dip, the volatility
didn't quite get to the 404.95, 404.84.
Stabilize, that it comes rushing back because the
Happy with that
fundamental,
stuff.
I mean, 10-year fundamental,
Basically
is
called
there
the top.
still demand for homes, Oliver?
Okay, and a lot of this
volume picked up on BBY the last
lack of
30
supply,
minutes or so.
which is the argument we heard from the housing community for a while, that as soon as rates slowed down, you would see that lack of supply kick in. People would push prices back up. So it's a pretty good report. Now you've also got General Motors in the mix today. And autos seem to be right now very hot again, which is kind of amazing, because this is the stuff that we heard consumers were going to start pulling back from. But I guess the prices dropped for autos enough with some of the cuts that are being made. Ford, Tesla, GM after earnings up 8%, Renita.
Yeah, so there's a lot of truth to what you just said about folks starting to pull back a little bit, because analysts are seeing this as the auto industry actually starting to normalize after those record low inventories and after that really resilient consumer demand. And so it would make sense if we started to see a little bit of a slowdown. Now, shares are rising, but they're off their highest highs of the day for GM. It gave a better than expected outlook for this year, also beat on the top and bottom line. Adjusted earnings per share beat, revenue missed, however, so it was not on both lines, but it was still decent enough growth, better than that almost 11% loss year over year. And improving chip supplies really did help GM sell more vehicles than in 2021. It boosted that number by about 25%. And inflation, the company says it was almost completely offset by the higher selling prices, but there's still signs of a margin squeeze with GM. And that's as we see net income slip, profit margin off a little bit, as well as adjusted profit margin also down. So it is showing, just as you say, it might be a slowdown at some point.
Pretty big rejection. This reminds me of
being characterized.
A lot of this seems like better than a year
that was a
ago.
much bigger dated upside,
where
I think.
Sales were declining a year ago.
Maybe not.
And so now to see some growth, surprises here
move back to
across
VWAP.
the board. Also, I think looking forward on the idea that these pricing cuts will invigorate the buyer again. Our sentiment number this morning was okay as far as data goes, Kev. The consumer connected to employment also seems to be getting a tailwind there, with the number of jobs still available, those being taken as well. Does this set the bar high for employment on Friday, Mr. Hinks? Because if people are going to be buying cars and houses, we better keep crushing our employment numbers.
The high frequency data
down 30% of those calls I bought in GME this morning.
That will be stronger than expected, Oliver.
GME opens up down tomorrow and all.
186,000.
10-15%.
Those are historic levels for jobless claims. And with what we've seen, that migration in leisure and hospitality jobs back into the workforce, not necessarily the high profile headline jobs that we see layoffs at every day, but the smaller companies that continue to hire, that's what's kept the payroll numbers stingy. Will that happen? You know, if trend holds and the data holds, we should get another good report and another strong payroll number on Friday, Oliver. Now, we'll get a look starting tomorrow with JOLTS and ADP. We'll get a real good precursor for what Friday will be, and then another jobless claims, and then off we go into payrolls on Friday, Oliver. Big week coming up here.
Okay. Thanks, guys, for the analysis on the earnings. Appreciate it. Big day here for stocks, running right into Powell tomorrow. Let's discuss that with Danielle DiMartino Booth, the CEO at Quill Intelligence, former Fed advisor. Danielle, welcome back to the show. Good to have you here today.
It's great to be here. Thank you for having me.
Appreciate that. Happy New Year to you. We haven't chatted in a while, so let's catch up and ahead of tomorrow with a pretty big day here. It seems like everybody knows they're going to do 25. That's the strong consensus. The gap maybe being later on in the year between the market's expectations for cuts, the Fed's lack of indication for that. Does that create tension?
I think it does. And in fact, you know, if it's Chair Powell's intention, in light of loosening financial conditions, in light of seeing home builder stocks and General Motors, as you're referencing just now, if he's going to be looking through that prism, he's going to say, well, you know what, I've got license really to keep tightening. And even if it's at a slower pace, we've still got that great big gigantic $8.5 trillion Fed balance sheet that's still being run down in the background, which is another form of tightening. But again, look at how these financial markets are behaving. They're basically saying, Chair Powell, you've got the green light to keep on going into the second half of 2023.
Now, he's done this before where he'll act one way but talk another way, and I think I hear that a lot right now as he'll do 25, he'll signal 25, and then he'll talk up a tough game. Are we getting to the point where talk is not going to do it if the market has that priced in already? Does he need to say that there could be a third 25 BIP this year?
Well, I think what he's going to say is that he remains data dependent. And Oliver, if you look back at 2022, he did a really good job throughout the year of moving the market's expectations for a tighter Fed than what the market wanted. So he's certainly got the ability to do that. February is a month that brings up congressional testimony, where he'll have a much longer time than he does behind the podium tomorrow to explain his way of thinking after we've got some more data under the belt. So he's got multiple opportunities, as opposed to the other Fed speakers coming up in the very short term, to change the narrative if that's what he chooses to do.
If we've got housing stocks trading the highest in a year, auto's trying to rally again, but really the housing to me, because that is sort of the epicenter of the interest rate trade. I mean, I know you're a Fed expert, you're a market watcher as close as anybody else, Danielle. Is this a disaster waiting to happen, buying these companies right now that seemingly are telling us that, I mean, if it's trading where they were a year ago, that seems to tell us that there's been no financial tightening over the past year.
That's true, and we've been advising our institutional clients that we see home building stocks as something of a value trap here, because Chair Powell does have his eye on interest rate sensitive sectors. Affordability remains extremely problematic in the United States, despite the decline that we've seen in mortgage rates.
Yeah, I mean, this isn't the time to sell.
And for inflation to
you want to sell when it's exciting.
You mentioned
so not to say you'll get a better price in the morning, but you could, even if it opens up flat and you just get like a little spike like this in the morning, you'll get more on this even waiting another day than you will right now. In the middle of the day when the volatility's low and it's
what do you think makes it complete at this point, Danielle? Do they need to go by higher increments? Do they need to very explicitly?
I mean, if GME gaps down 2%, which it could, and then just kind of keeps melting down, then yes, you'll get more money now. But even if it gaps down 1% or 2% and then has some sort of bounce, you're probably going to get more money than you are right now for it. And so, you know, it takes money to have exposure, and with that more time, you're going to have exposure to tomorrow morning if there's a gap up. Because they have until Wednesday open
anticipating the Fed stepping back quickly and pivoting and taking rates back down to the zero bound.
Shares.
I don't think that that's this current
What's going on with this?
Share. I think what's much more pertinent right now is the fact that he's going to get interest rates up to a high level and keep them there for most of this year.
Does he have any precedent to push the expectations from the dot plot in a more aggressive way? Because it seems like that's kind of their out, where they'll say there's no cuts on the horizon if you look at the dot plot, but hey, the dots aren't everything. Does he need to establish some kind of more stringent process for telling us how we get to those cuts that the market is thinking about?
Well, Oliver, to your point, it seems like Chair Powell uses the dot plot at will. One meeting, he'll say, you know, that he anticipates that the dots are going to move without there being a dot plot out. He'll speak hawkishly, and sometimes if the dot plot doesn't say what he believes the future is going to be, then to your point, he will talk and down and set the bar higher. And I think that we're going to be looking for those kinds of nuances and details when he's at the podium tomorrow afternoon. Absolutely.
I think that's TD doing
so it
that.
Sounds like you think this impasse between what the market's thinking and what Powell's told us so far could potentially create some volatility for some of these trades.
Okay.
I think that volatility is going to be the name of the game here in coming weeks, certainly.
Okay, all right.
I gotta sign off.
Danielle, thanks a lot.
Likewise, thank you.
All right.
Okay, gonna do my recap video. Sub up, like up, comment down. Happy money sticks around. Turn the notification bell on YouTube so you get notified. There's our Twitter, follow us on there, and our Discord. Link for those are in the description. Forgot to put it on the chat, to pin it in the chat, but it's in the description. I'm gonna recap video, show my trades today. Actually opened a few trades today, so I'm gonna go over those and then some technical analysis. What I think is probably coming. Uncertainty with GME, BBBY certainly. Okay, I'll see you guys in the video. See you on Discord.